Good morning, ladies and gentlemen. How are you guys doing today? Trying to put together as many pictures as I can for you traders. Hope you guys are doing well. Good morning, good morning. I asked the question at the beginning of the chat box this morning, guys. What are your goals, right? Good morning, Roku. Good morning, Vittorio, JW, Muser. We got all the cool kids in here. Cav, nice to see you. Do you guys have a goal daily? Have you written it down? Have you committed to it? And then I think the second thing is asking yourself, so $1,000 a day, Diamond Dave. Cool. I like it. Cav, you're trying to make 500 a day? 500 a day? 300? Cool. Guys, these are great. These are realistic goals. I'm assuming most of you are trading a two lot. And the reason I was asking this, right on, two contracts and a runner. I like it, Dave. And everybody has a different plan. Still 800, Ron? This is a great week. The reason I asked this question and the reason I put this out there, because I have talks with people all the time. You're on a four lot, JW? Cool. So, and your goal was 300. So you're trying to make $75 a contract? That feels pretty easy. Or 300 a contract. And I break it down like that. I'm trying to make $250 a contract, guys. Whether I'm trading a two lot or a 20 lot, 250 a contract is my goal. And all of these are very easy, guys. But I want to talk about some of the things that happened because we all say, "Well, I only need to make $500 a day." And guys, there's no doubt in my mind you can do that. If you're patient, if you're waiting, $500 a day really is a very realistic goal. But the question is if it really is realistic, if it is easy to obtain, and I think everybody in the room would agree that it is easy to obtain, you have to ask yourself, why am I chasing so many trades? Why do I feel compelled to be in every move in the market? Why do I have to try to be the first one in? And why do I try to have to be the last one out? And I think that if you sit and you ask yourself for just a second, what's it going to take to reach my goals? And then Paul put up there probably 2 to 3 trades, and Paul can reach his goals. And I think that I'm asking this, guys, not because I'm trying to stifle you or stunt you or anything like that. But I want you to not only focus on the trades that you're taking, but let's use advantages and let's use our rules to keep us out of the trades that we shouldn't take. Because I believe everybody in this room would agree with me. If you said it's not that I'm losing the right trades all the time, I'm making up for taking the wrong trades. Does anyone else have that challenge? Where it doesn't seem like you're necessarily not finding the right trades, but the right trades are working harder to make up for the wrong trades. Good morning, Erla. Nice to have you back. So patterns repeat themselves all day, and we can create expectation based on patterns, but let's let the patterns tell us when it's time to make sure that the rules are met rather than just trying to trade what we think or what we hope or what we wish or what we want. That's it. I'm going through stuff in my head trying to figure out how we get everybody in this room profitable quickly. Guys, it's going to start with reflecting around advantages. And the first one is knowing when news is going to print. Understanding when they're going to release news because there's somebody that's got more money than you that's going to move the market based on it. Guys, we trade patterns, we trade rules, we don't trade news. At least I don't. I hope you don't. There's just no need to with what we do. Things that can affect the volatility in the market, right? If unemployment claims come out at 8:30 a.m., and they're poor, well then somebody may react to that, and if they're great, somebody may react to that. So all we're doing is we're trying to get ourselves out of the way of the reaction. 9 a.m. right about now, guys. We've got a couple FOMC members speaking. It's low impact, but when FOMC says something, it can move the market. So be aware. 10 a.m. existing home sales, it's a medium impact. It may move the market. I really believe that looking at news every day and then choosing not to trade into it is an awesome advantage that you can give yourself. Everything that I talk about comes from the education page, guys, every day. Everything comes from the education page. The tutorial section has all the rules, has all the looks, has everything that you need to be successful. I promise you, pinky swear, everything you need to be successful. And the one path, I think the path of least resistance to success for everybody that I've ever worked with is understanding the high probability trend trade first. Taking these very basic concepts, this very simple trade, this trade where each indicator on every chart agrees for the trade. This is a trade that typically wins 70 to 80% of the time, and this is a trade, and I love this phrase, I should put it on a coffee cup. Guys, this is a trade that creates confidence through the memory of success, because anything that wins more than it loses is having more successes than failures. And guys, you start to feel good, you start to trust, and you begin to recognize, and you get to the point, good morning, Zorro, where you never want to miss this trade, where this trade is like, okay, I've dug myself into a hole, let me wait for this trade. I hear people say that. I'm not catching the best moves, and I'm getting stopped out a lot, let me wait for the best trade. And it's interesting because people will go back to this trade when they've been breaking their rules. People will go back to this trade when they've been forming opinions. People will go back to this trade when they're not finding the success that they wanted in the market. So it's interesting, and I'm sure that there's some amazing psychology to it. But why on earth do we abandon this trade in the first place? Why do we get away from this high probability trend trade? And I really believe the answer is that everybody likes to be active. And most people would rather be busy than profitable, which is weird when you think about what we do. But most people feel like they need to be in more trades, and they don't talk to themselves and say to themselves, man, I just need to be in the best trades. I need to be trading with the advantages. I need to be trading without anything in the way. I need to be taking a trade where I can go back and look at it and study it and prove that it's a pattern that wins more than it loses. And guys, I think once you do that, once you get to that point where you realize that you don't need it all, you just need the best, you're going to take a huge weight off of your shoulders. We talk about this high probability trend trade because this is a trade that gives you the most important skill that you could ever have, guys, and that's becoming a chart reader. That is being able to look at your chart and understand three very key concepts: where the market is likely to continue, where the market is likely to go, and where the market is likely to stop. And once you understand these concepts, guys, you're going to put them into action. Chart reading is about 90% of your day. If you're doing it correctly, chart reading is about 90% of your day. Chart reading is looking for advantages, and then when they're present, that 10% is taking the trade. You're going to use these concepts where the market is likely to continue, and this is going to become your entry for the highest probability trend trade. You are literally going to be able to pinpoint exactly where the market is likely to continue and use it for entries. You're going to understand where the market is likely to go, and these likely to go spots become targets for you, and you'll understand where the market is likely to stop, guys. And likely to stop can change the trend. Likely to stop can just create untradeable bounces, and likely to stop areas, we call them termination conditions. These are where the people in charge, the people that move the market, the people that establish all the advantages that we look for, guys, this is where they are making decisions about entering, about exiting, about taking profits. And this is where fights happen. So we're going to use these very simple concepts. We're going to learn them through the high probability trend trade. And we're going to use these ideas, this chart reading, and it's going to take you to trade entry precision, getting into the market where the market is most likely to continue. For the average user, for the mere mortals that most of us are, guys, if you spend 20 days focused on the advantages of a high probability trend trade, if you spend 20 days learning how to enter at the correct spot, it's going to set you up for a very simple management plan. It's going to set you up to be able to take bigger profits, to take less risky trades, to manage yourselves over and over. Um, and you know what, Paul, you start to feel that you're failing, especially if you're negative P&L, or what the hell is wrong with you? Everyone else is posting one trade after another. Do you want to know the truth, Paul? I'm going to give you the answer that nobody wants me to tell you. Is 90%, God love all of you, are absolutely full of shit with their posting. Most people in the room won't post losers because they don't want to admit failure. Most people in the room won't post losers because what are the Joneses going to think, and I'm not keeping up with them. And people won't post losers because people perceive losers as a failure. And guys, losers are not a failure. Losers are where you learn. And it's true, I know, because I did it. Oh my gosh, I would sit in my brother's class, and guys, I would get run over 10 times in a row, and then I would post this amazing winner where I made like $500. And my brother would look at my charts posted in the room, and I'm going to show you exactly what it would look like. Um, so I would post, for example, oh, I don't have any of my pictures in here. Hold on. I would post, for example, bum, 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 bum. I've been doing a lot of picture taking this morning, guys. That wasn't the one. I don't even know what that was. Hold on. Oh, that was from way back when. Okay. So I would post, for example, this trade. And I would get in and I'd make money and all this sort of stuff. And you'd see over here is the P&L, right? So over here is where you can see what your money looks like. And my money would be negative $1,700. And I'm showing my brother this awesome trade. And he would go, all right, Mark, that's cool. Let's look at the trade. But let's talk about this. Because you just made $1,000 on this trade that you're putting in the room, that you're showing off, that you're so excited about. But where is the negative $2,200 that you're not sharing in the room? Where's the negative $2,200 that we need to fix so that you can keep this money? And guys, this is such a common thing. And it's okay. It's up to you. I'll never make you guys post. And I'll never tell you that you have to participate in the room. But don't compare yourself to what you see in the room, because there's very few people that are 100% transparent. And there's very few people that will post losers. Sometimes they won't post them because they understand the mistakes they made. Sometimes they won't post them because there's a level of shame. And I'm going to tell you guys right now, the most effective learning that I've ever had in my career learning to read these indicators came from understanding my losers rather than inflating my ego with the winners. The winners are great. When their rules met, that's awesome. But I've got to learn how to eliminate the problems that are creating challenges for me, that are keeping me from my goals. And you do that, and I did that by posting my trades in class. Guys, this is the fastest way to get to where you want to be. So Erla and Troy, and who else is new with me in here? Guys, day one, start doing it. Start posting in the room. Start saying to yourself, hey, you know what? It's cool if I'm a loser. And if you're nervous about it, change your name. Gino, get rid of that handsome man on your picture and change your name to Gina and show me everything, right? But Gino, you share everything with me, so I appreciate it. But do that. Change your identity, guys. This is online. This isn't real, but the education is real. So change your name, change your gender, change whatever you want to be, to make it comfortable for you to post in the room. Because the person that posts the most, guys, they make the most money. These are the people that get to where they want to be the fastest. These are the people. When you drop a picture in the room and you say to me, by dropping that picture, hey, Mark, this was my chart read. I saw strong triggers and I noticed that the path wasn't clear. And this is what I identified from where I was coming from. And I took an entry right here and I exited right here. And all you're doing when you do this, guys, is you're saying, hey, Mark, Let's talk about it. Let's talk about my read and let's make sure that I didn't miss something. Let's talk about my entry. Maybe there was a way for me to do it better. Maybe I did it perfect. Maybe I jumped in too soon. Maybe I jumped in too late, right? So all we're going to do is talk about it. And then I'm going to work with you guys as you grow with the software a little bit. I'm going to say, okay, if you jumped in here, where did your stop have to be? Because I want you thinking about managing your trades. And if you exited at Fibonacci resistance, I'm going to be like, man, what a great way to get paid. What a beautiful trade. Nice job. And all we're going to do is we're going to talk about it every day. So it's literally like getting a private session with me if you just post in the room. And then the next thing is use the spreadsheet, guys. Nexgen gave you this spreadsheet. I give it to you in the room every day. I give it to you right now. This spreadsheet, guys, this is how you're going to get to where you want to be. True story. The more pictures that you take, whether they're trades or not, the more pictures that you take, the more you're going to recognize these looks. The more charts you annotate, the more you're going to associate looks with success, with rules. And the key to using this one is your first tab on the spreadsheet is your copy of your tracking, guys. Every time you take a trade, win, lose, or draw, right? So Haji said, hey, this is the trade that I took today, and look at that awesome entry, Mark, and look at this amazingness. And Haji, seriously, high five yourself. Haji's going to drop this into a spreadsheet, and tomorrow, Haji's going to go, man, with this level of momentum and nothing in the way, I was able to capitalize. With this perfect entry, I was able to minimize my risk without an emotional attachment to the money, but rather a very pragmatic plan for entries and exits. This was probably the easiest trade Haji's taken in a while. And Haji's like, this is what I want to do tomorrow. Tomorrow I want to catch this momentum, and tomorrow I want to get paid. And I see you were break even there, and that's okay. And we'll talk about these not being home runs, making sure that you get cash in pocket, right? And then what a beautiful entry. And everyone in this room is going to learn how to take this entry and getting paid and getting paid. And Haji, I'm telling you, beautiful trading, beautiful trading. So Haji's going to be like, this is awesome. That worked. And this didn't. So let me avoid this, right? Let me avoid these split triggers. Let me avoid these 50-50s with multiple divergences. Let me avoid the lack of momentum and me labeling this a momentum trade. And you're going to find that the ones that follow the rules with all the advantages, guys, these are the ones that keep you relaxed and feeling easy, and your palms don't sweat and your heart doesn't beat out of your chest, and you don't suck a pleat into your chair because of the pucker factor. And then the ones that feel forced, the ones that make you nervous, guys, it's because you're breaking your rule. And even if you won't admit it overtly, your brain knows that you're doing it. And your palms start sweating and you find yourself scaling charts and moving stops. But if you do this every morning and you ask these very simple questions, you're going to begin to see the patterns that are bringing you success. But you're also going to see the patterns that are taking it from you, not only in the market, but also in yourself. You're going to recognize those patterns. Roku, you can always go up and click on his pictures too and open them. But there it is. But I'm not going to analyze charts just yet. I was using Haji as an example for what it is we're looking for. But here, I'll copy his image and drop it in there. If you want to go study it, annotate it, and then if you have questions about it, drop it in the room. And this is another one of the great things about putting your charts in the room, guys, is other people get to learn too. And it's an awesome community in here where everyone's very supportive, looking out for one another. And that spreadsheet is just going to get you to where you want to be faster. So track every trade, especially the losers. Write what was going on, how you felt, and then use the feedback from class to give you something to study the next day. There's a favorite looks where you guys are going to create your trading plan, where you're going to, I like that, Paul. You're going to take the looks that are easy to you. You're going to take the looks that follow the rules. You're going to take the looks that provide advantages, and you're literally going to build a plan right around them. And you're going to say, I've got 100 pictures of this look, and I'll be damned, this one wins 70 to 80% of the time. I need to make sure that I never miss it. And as you grow with management and recognizing patterns and termination conditions, there's areas for all of that stuff. And then this is the client trade section, guys. This is where I have liberated about 300 pictures from this room of you guys being absolutely beautiful with the software, taking advantage of the things that we teach. Great entries, awesome exits, beautiful management. I've filled out a whole section for NASDAQ, guys. And as it grows every day. I add to this almost every day. So always re-download the software or the spreadsheet. There's management plans, there's entry sequences, there's ideas to hold for bigger moves and when to get out when things are changing. Patterns that repeat themselves, because that's all we're trading, guys, is patterns. But our rules have us focused on the patterns that win more than they lose. And then a whole section to termination conditions, because honest to goodness, guys, this could have been called the Novak loses trade sections, because when I started trading, my biggest challenge was not believing that a termination condition could stop the market, that not believing that these key Fibonacci areas were capable of removing me from my money. So I had to do a lot of legwork on termination conditions, but my tracking sheet and studying it and the feedback from class is what let me recognize that that's where I needed to focus my attention. So post a lot in the room, guys. Tell me what you see. Use your spreadsheet. Go back and study it. Don't just do it to do it. Study that spreadsheet. We're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. You guys simulate, practice, mess up, break things. Doesn't matter. Just post them in the room so that we can talk about them. We're going to celebrate victories heavily, guys. I'm a very touchy-feely, hippie kind of guy. I want to lift you up and celebrate everything that you're doing great. But the flip side is I've also got this little parental gene in me, and I'm going to try to protect you from yourself. So even if you win, if you got lucky, I'm going to say, man, Diamond David, you broke every rule that I know. Every advantage had flown out the window, and I realized that you made a grand, but man, that's probably not going to work tomorrow. And we'll talk about it, and I'll try and get you in this ability to have these short-term victories and long-term success by practicing the correct trades. We're going to simplify heavily. We're going to talk about a high probability trend trade. That's that trade where each indicator on every chart agrees for the trade, guys. This is the best of the best. This is the one that teaches you to be a chart reader, the one that brings you confidence. And what you'll do through that high probability trend trade is you're going to begin to recognize those advantages. You're going to begin to see these patterns. And then it's going to establish like this whole new set of rules, these whole new looks that are capable of bringing you profits. But you've got to learn the simple looks first. You've got to learn the easy looks first. You've got to go through and recognize advantages so that you can get there. So that's what takes me to the fourth tab. It's really the second, but the fourth one that I talk about. I've taken each rule for the high probability trend trade. I've broken it into a category here. Rule met, rule not met. And I'm going to put this on you guys right now, and I'm going to give you homework, and I'm going to challenge you, and I'm not going to lie to you. Most of you are going to skip this exercise because it feels like too much work. And you know what? You'll get exactly what you deserve out of your results if you don't put any effort into it. Guys, this is nothing more than taking pictures of rules being met, taking pictures of advantages, burning them into your brain so that you can recognize them at the drop of a hat. I put this in there. We'll talk about it more. But I'm going to tell you right now, I don't believe that there's anybody in this room that if you took 50 pictures of strong triggers, you would ever miss the advantage of momentum. And if you took 50 pictures of termination conditions, you would probably never trade into a termination condition. If you took 50 pictures of perfect entries, you wouldn't hesitate. You would know exactly what it looks like and it would become effortless. But the problem is nobody wants to learn the parts of a trade. Everybody wants to just get going and say, hey, I want to get paid. I want to take a trade and I want to get paid. I don't know what I'm looking for. I don't know why I'm looking for it. I don't know why it's a good trade. Hell, I don't even know how to manage it. But Mark, how do I make $1 million? And it's just, it doesn't work that way, guys. So we're going to break it down in the ultimate simplicity. 2 charts. Big chart, little chart. This is all you need, new users. This is all you need to become a chart reader. And the reason we do 2 charts is because the market's controlled by people with more money than you. The market is controlled by people that have millions of dollars. and they can create trends and they can create momentum and they react to those key areas. These are the guys that I want to be on their team. I want to be on team big crowd. It's like a lazy river, guys. If you've ever been like at the MGM in Vegas or the water park with your kids, if you go with the lazy river, you have the best day ever. But if you try to walk back against that current, it's a fight and you get tired and you don't gain a lot of traction and you're just better off completing the loop and picking up those sunglasses on the next lap. So the large crowd, guys, they're the easy ones. Trade with them. And then your small chart's going to be like the small crowd, the people that are willing to fight, the people that have to be first, the people that don't care that the people in control are going up. And guys, we are going to absolutely exploit those guys on our smaller chart to find where the market is most likely to continue. And we are going to have a love affair with these small crowd people because they're going to allow you to reduce your risk and they're going to allow you to increase your profit potential. And you're going to be able to dissect one bar on the large chart into 15 to 30 bars and pinpoint exactly where the market is most likely to continue. And it's going to take 3 rules to do it on those 2 charts. Each rule for the high probability trend trade gives you an advantage. That's it. And it's 3 advantages that create a trade. So your goal should be to speak to yourself in terms of advantages. This is what I see on my chart. Do I have momentum? Do I have a clear path? Do I have an entry area? If I do, guess what? I have a trade. And if I don't, son of a gun, I've got to sit on my hands. It's part of that 90%. It's part of that waiting period, and I don't want to give it back. I don't want to lose money without advantages because then I don't get to keep as much as the money I make when I have advantages. So each rule provides an advantage. The first rule gives me the advantage of momentum, guys, and that's strong triggers. And once again, I'm going to be able to establish strong triggers on my large chart. I'm going to be able to do it on the most current bar, the first bar. And strong triggers means that if my background is green and the market is going up, that my small triggers, the solid lines, and the dashed lines, which are the large triggers, they must be wide and angled in the direction of the trend. And when I say wide, I don't mean pinched together and flat. I mean like shark about to breach. And when they're both wide and angled in the direction of the trend, guys, it's the separation between the small and the large. I want you to picture this. Here you go. So for you guys that aren't visual, I had someone tell me, Mark, I just don't see it. I want you to think about it like this. Whoops, wrong one. We're going to draw. This is your first blade. This is your second blade. And what these strong triggers have done is they give you the look of scissors that are open, that are ready to cut, that are able to get work done. And when the scissors are open, guys, you have strong triggers. And these strong triggers let me know that the odds are favorable for the market to continue up. That this trend that's been established by the people in control is more likely to continue in that direction because of the strength. In a downtrend, when your background is red, the small triggers go below the large triggers are wide, and that space between the two, like scissors, opening, ready to cut, guys, that lets me know that the odds are favorable for the market to continue down. Odds favorable momentum is going to be our battle cry in this room, guys. For the brand new users, odds favorable momentum pushes that market, and odds favorable momentum can break key areas. And odds favorable momentum will even cover some of the mistakes that we make as new users. So commitment to rule number 1 is going to set the tone for everything you do. It's going to give you the best of the best, that market that's likely to continue. But remember, it's not going to last forever, right? Scissors close sometimes, and you'll see it. You'll go from odds favorable, best of the best, and those scissors will start to close. And you can see that the momentum is going away visually because your small triggers are coming back. You still might be able to take short trades as you grow with the software, as you learn to recognize advantages. And then once those small triggers work their way inside of the large triggers, those scissors are closed. Guys, you can't cut with closed scissors. You can take a stab at things, right? But anything can happen up or down with these weakened triggers, guys. And I want you to use the language. I want you to embrace the words. Odds favorable for the market to continue up. Anything can happen up or down. and it really becomes a little bit of a crapshoot, guys. So odds favorable. Let's go back one more. You guys are going to be able to pinpoint on a small chart where the market is likely to continue. You're going to be able to buy Fibonacci support when they're strong to the upside. You're going to be able to sell Fibonacci resistance when they're down, when they're strong to the downside. On your large chart, on the slow chart, it's going to look like a tail or a wick. I want you guys to know right now, and I promise I'll teach you how to do it. You're going to be able to pinpoint exactly where that tail is most likely to form. You're going to be able to pinpoint where that high is going to be, and this is going to be your sell point to ride that wave of momentum with the trend, with everything going down. And guys, when it slows, it's okay to say, man, I just don't know. I don't know if it's going to go up. I don't know if it's going to go down. My statistical advantage has gone away. I no longer have momentum. I'm very comfortable and capable of sitting on my hands and doing absolutely nothing, and I'll wait for that momentum to come back. These weak triggers also, guys, when they reach support or resistance, man, that's a trend killer. That's when these key areas hold. That's when your large chart is going to define areas. But before we do it, let's go see if we can't find one or two examples of odds favorable momentum. This is crude oil. And let's see. Let's make it nice and big for you guys. Smalls break away from the large trigger, space between the two. That helps us break a few areas. Smalls work their way back in. Sounds good, Cav. And look, there's weak triggers right at resistance. And sure enough, the market's pushing down. Odds favorable momentum. Everything is on its way up. Guys, there's your tail. That's where you guys are looking for entries. Weak triggers, and there's your reversal. Odds favorable. There's one of those tails. Continues down. Odds favorable. There's some of those tails. Continues up. Guys, give me a Y in the room if you're with me. And you're going to be able to recognize this on the most current bar. The most current bar is going to let you know whether or not you have the advantage of momentum or whether or not you don't. Erla, your link missed the H. You got the TTPS, but not the HTTPS. And just so you newer folks know, I am going to review charts after we talk about rules. So if I don't go straight to your chart, I'm not ignoring you. If you need feedback before you leave, and I haven't gotten to that point, let me know, and I promise you, I will give you that feedback. So guys, large chart says up. The background is green. Large chart says momentum. Smalls broken away from the large, everything wide. I've already got rule 1 met. I already have momentum. So now I need to look for rule number 2. I need to make sure that I'm not trading into one of those termination conditions, that I'm not knowingly trading into an area that may stop the market. Because when there are no termination conditions, I'm going to have room to my profit targets. And when I have room to my profit targets, guys, we're just going to call it a clear path. So a clear path means that I haven't hit anything. It's really that simple. I'm driving my car and there's no brick walls, guys. We're going to use lines on the large chart. And this is where decisions are made. This is where the buyers buy and the sellers sell. This is where profits are taken and trades are entered. These are areas that can create an untradeable bounce. These are areas that can reverse the market. And we're going to give you the very simple recipe, guys. We're going to use those T3 trigger lines, the same ones that gave us momentum. And we're going to use those when price reaches one of these key areas, and you will understand whether or not it is likely to stop the market, whether or not it's has the potential to break. And you're going to know when these areas have broken so that the path is clear once again. And you're going to do it with the simplest of recipes. If price reaches an area, and I want you to tell yourself, write it down on a piece of paper, text your girlfriend, your boyfriend, price reaching the area sets off the decision-making process. Price reaching the area is what tells the sellers that it may be time to take profits. It's what tells the buyers that it may be time to enter a trade. So when price reaches an area, in this case, Fibonacci support, all you have to do is ask yourself, where are my trigger lines? If they remain above Fibonacci support, support has the potential to stop the market. It has the potential to create an untradeable bounce. It has the potential to reverse the market. It also has the potential to break. But if the triggers remain above No more short trades, not into that area of support. We have to wait for the reaction. Let's give ourselves the advantage of a clear path. And the path is clear when both the small triggers and the large triggers, both lines of both, get through the area in question. So up here we hit support and the triggers hadn't broken, and I sat on my hands and I did absolutely nothing. And for 25 excruciating moments, I wasn't in the market. But then the smalls and the large made it below. And Fibonacci support began to behave as Fibonacci resistance. I also couldn't help but notice that I had odds favorable momentum because I'd taken 50 pictures of it, and I never miss it when I look at a chart. And with that momentum and a clear path, I went back to my rules and I pinpointed right where the top of that tail was likely to continue. I entered the market in a short position on my smaller, faster chart, and I was able to ride that momentum all the way down to Fibonacci support. And guys, this is what we're teaching right now. It's okay to be patient. It's okay to not trade into areas. It's okay to insist that your rules are met. So, two options really for the brand new user, and let me help you out. The first option is that price reaches an area and none of the triggers break it, therefore there is no clear path. The second option is that the area is in fact broken, that you have a clear path, that both the small and the large triggers have broken through the area in question, in this case resistance, and now the path is clear. And you'll notice that there's also momentum in one of those tails, one of those pinpointing entries. You guys are going to get really good at this. This is your high probability scenario, ladies and gentlemen. This is the best of the best. This is the look, and I'm going to show you right now. This is the look right here that makes life easy. This is rule number 2 being met. This is the look that is one of the most broken rules out there. And this is the one where you guys lose an awful lot of money hoping that areas break, and there's just no reason to do it. There is one more scenario, guys. I want you to see how the small triggers absolutely smashed through the area in question. But the large triggers, they're a slower moving average. They're kind of lagging behind a little bit. With odds favorable momentum, and it's imperative that you embrace that part of this equation. With odds favorable momentum, when my small triggers smash through an area, this area has the potential to break, guys. All that momentum has the potential to break this key Fibonacci area. The further through the small triggers are, very often, the more likely it is to break. But guys, this is not a broken area. It can never be a broken area. It can never be a clear path. This is nothing more than the potential to break. And without a clear path, it's imperative that momentum is present. It's imperative that your entry areas are perfect. And the cool thing is, though, is I'm going to give you guys a plan to not only capitalize on the clear path, but I'm going to give you a trade that helps you capitalize on these areas with the potential to break. And this is what we call a medium probability trade. And a medium probability trade is nothing more than hoping the area breaks because of a couple advantages. And I'm going to give you a plan to take that. I want to talk about divergence real quick and how we use it in terms of termination conditions. The first way we use it is on the large chart. Divergence means that there was a loss of momentum. Divergence means, excuse me, that the market had to go down and then up, or the market went up and then down. And if there is a loss of momentum at that pivot, if the momentum doesn't follow price, you're going to see the cyan line print from a low. You're going to see a magenta line print from a high. It is not a termination condition. It's not a giant red flag. It is not fire, brimstone into the world. All it is a loss of momentum. That's it. Just a loss of momentum. And it doesn't mean that the market's going to reverse. It doesn't mean that anything is going to happen other than the momentum didn't follow. But when price reaches a divergence high or divergence low, and the triggers remain above, well, then it behaves as a termination condition. If price trades below and then back above, guys, now it's what we call a pivot stop out. And a pivot stop out can reverse the market. A pivot stop out's a pretty powerful indication that the market may reverse. And these pivot stop outs are going to happen on the large chart, and they're a great indication, and they're strong. And they're even stronger if they coincide with Fibonacci support or Fibonacci resistance. So don't get suckered into thinking that a loss of momentum is some monumental event, guys. It's just a recognition. Always embrace the idea that price must reach it, triggers must stay above it, and now it's behaving as a termination condition. And then one more picture for you guys, and I always draw on this picture. I'm going to do it again. This is the one that reminds you that 90% of your day is spent reading indicators. 90% of your day is waiting for advantages. Hey guys, with all this momentum screaming to the downside, price goes headfirst into these yellow 1-to-1s. And when it does, the triggers remain above. And each and every person in this room is capable of not giving any money away in a short trade when this happens, because the rules say don't go. The path isn't clear. Straight from this support, there is a big reaction. There were buyers down there. And the buyers pushed it all the way up into that Fibonacci resistance, and all the triggers remain below. A very simple recipe to keep you from going long. And then it pushes down again. The smalls are up, but the large are down. That's not the look for odds favorable momentum. Rule number 1 isn't met. And guys, this little battle, this little fight between buyers and sellers, it goes on for about 45 minutes. 45 minutes is your 90%. 45 minutes is where most of you guys can blow out an account pretty easy, forming opinions. But here's the great thing, and this is why I wanted you guys thinking about what your goals are. If I don't give away $1,000 when the rules aren't met, when I end up with momentum and a clear path, and I pinpoint that entry inside of favorable large triggers to take the highest probability trend trade ever, and I make $500 on this trade, my day is done. My day is over. My goals are met. I'm going to go swing golf clubs. I'm going to walk on the beach with my wife. I'm going to do something, anything, other than give it all back. And this is that 90%, 10% idea, guys. You've got to be okay with the idea that billions of dollars trade every day. Billions. You're only trying to capture 250 per contract. You don't need to be in every move. And if you're in the best moves, you're not going to work very hard. My brother used to say, what if Elon Musk called you up and said to you, hey, Jen, I've got a job for you, and I need you to sit in a room for 8 hours a day, and I only want you to click a mouse 5 or 6 times when the conditions are right, and I'll pay you $150,000, $200,000, $300,000 a year to do it. There's nobody in this room that wouldn't take that job. And you've got to treat this like a job. Your job is to click that little mouse 5 or 6 times a day and make your money and get the hell out and go enjoy your life. Is everybody comfortable with the idea? Price reaches an area. If no triggers go through, whoops, that's the wrong chart. Where's my big chart? There it is. Price reaches an area. Look at that. If the triggers don't break, don't go long. I tried Jen. He said he just wasn't into me, which is weird. I'm not a bad-looking fella, but whatever. And it pushes all the way down to the mid-band area, guys. And look, it doesn't go. And then it hits it again. Divergence high stuff. Weaker triggers, and that seems to be what's setting it off to the downside. How many of you went long into this and lost money, right? Price pulls all the way back to support. None of the triggers break, and the market continues up. Weak triggers told me that it might be changing. Look at the bounce off of support. Look at resistance holding. Look at support holding. Oh my gosh. There's one of those pivot stop outs right at resistance. Guys, this is the greatest picture ever. This is yesterday afternoon in crude oil. Whoops. So I want you guys to give me a Y in the room if you're cool with this. Price reaches Fibonacci resistance, the triggers remain below. There's no reason to go long, even with green triggers. Price comes all the way down to support. No triggers break through. Whoa, that's the wrong one. I'm so misleading right now. No reason to go short. And then what else do we have? There's another one, and there's another one, and there's another one. And there's so many perfect visualizations of when you guys don't need to be doing something that it begins to build this patience. And of course, this is towards the end of the market where there's a lot of indecisions. One of the other things that I want you guys to see, and we're about to talk about this, 3 divergences. The third one's lower, the triggers are weaker, and that's what kind of set off this huge move down. And that's really what set off that last ditch effort to push up. And guys, these divergences can be used as well. Man, look at that off the terminate. I'm sorry, I get giddy when this happens. This software is amazing. Sometimes the market turns from nowhere. It's okay, Cindy. You could have snuck in. I would have never known. I mean, I felt like something was missing from my life for the last 44 minutes, but I didn't realize that it was you, but now I do. So, it's the same hour, every day. So you've heard this talk. Guys, sometimes the market turns from nowhere. Sometimes it doesn't make it to that Fibonacci area. Sometimes it doesn't make it to those one-to-ones. We're going to use a termination condition on the small chart to help us identify change that may be happening on that bigger, slower chart. And we're going to use 3 divergences in the same price range. And Paul, to answer your question from this morning, absolutely, 3 divergences also happens on higher time frames, but we're going to see it on a small chart first. So 3 divergences, no matter what chart you're looking at in the same price range, may terminate the trend. And if you guys keep eyes on the chat box, I want you to see something. It may terminate the trend. It might terminate the trend. It could terminate the trend. It has the potential to terminate the trend, but it's not guaranteed, ladies and gentlemen. But if I see 3 divergences in the same price range, guess what? I no longer have a clear path. I no longer have that advantage that I'm looking for. And this is the only instance on a smaller, faster chart that I'm going to give the power to tell me that rule number 2 is not met. So 3 divergences in the same price range may terminate the trend. That on its own is a termination condition. It becomes more powerful if the small triggers are inside of the large triggers at that third divergence. Does everybody remember the lesson on odds favorable momentum? Well, the same look is true on a small chart. That's a great look for momentum. This is a horrible look for momentum. When I couple that with 3 divergences, it's more likely to terminate the trend. And then if the third divergence is higher than the second or lower than the second from a high, guys, it's a head and shoulders pattern. It just adds a little more fuel to the fire. So you're going to be able to use 3 divergences in the same price range, and you're going to use it to recognize change that you can't see on that big, slow-moving freight train of a chart that the large chart is. So keep your eyes open. This is enough to keep you out of that last short. Once again, not giving money away when there's no reason to. So our large chart has defined the direction of the market. Everybody can see that the background is green on the most current bar. And our large chart has told us that rule number 1 is met, and I do have the advantage of momentum through strong triggers, and that once again is on the most current bar. This most current bar also has not reached Fibonacci resistance up here. But both of my triggers are above resistance back here. Guys, I have rule 1 met. I have the advantage of momentum. I have rule 2 met, the advantage of a clear path. So now I'm going to dissect this 1 bar. I am going to break it down into 15 to 30 bars using the smaller, faster chart. And my rules say that I am going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. I'm going to use a limit order, which means that I'm literally going to wait for the market to come back to me. This is the small crowd working now, creating that little pushback. And I'm going to use a limit order at an area. Fibs, mid-bands, or yellow one-to-ones. But here's the key, guys, is they have to be inside of trigger lines. Trigger lines are moving averages. Trigger lines show me where I can expect the market to correct, where I can expect that pushback to go. But here's the key, is trigger lines are awesome, but they're just moving averages. They're like clouds. I need something solid to bounce off of. So I'm going to use areas inside of those trigger lines. I'm going to give the market something to bounce off of, the same way a tennis ball would bounce off of a brick wall. Areas inside of favorable large triggers become my best spot for entry. The odds go up. The window where the market is likely to continue decreases if I insist on those trigger lines being one on top of the other, like two snakes riding piggyback. And guys, when these triggers are right on top of each other, we call them favorable large triggers. Because my correction spot is as small as it can possibly be. And then I've got to shoehorn areas inside of there to give myself the best possible entry. So let me give you guys this picture. I'm not sure that I have it in my little PowerPoint. I should probably put it in there. Favorable large triggers, guys. We're going to use a limit order to buy or sell a pullback, that shove from the small crowd at an area inside of favorable large triggers. So when the large chart says up, when the large chart says strength, when the large chart says clear path, this is going to be the look on my 5-1 on my smaller, faster chart. This is where I'm going to start looking for my entry. The first thing I'm going to do is I'm going to look for those trigger lines. Where are they? Are they wide? Are they angled in the direction of the trend? Are they overlapping? And if they are, then I'm going to start to look at areas. I'm going to look for fibs, midbands, yellow 1-to-1s, but I'm not entering the market yet. I'm not just jumping in arbitrarily. I'm waiting for that small crowd to do their thing. And some of you are thinking, but Mark, what if the small crowd doesn't do their thing? Well, then guess what? It's not your trade, because that statistical advantage isn't present. But more often than not, guys, the market is pretty predictable in this regards. That small crowd starts a fight, and it starts with a reversal bar. The reversal bar signals the beginning of a pullback. That is not your entry, because the rules say that I'm going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. That's a lot of words. That is the wordiest rule set that we have. But guys, this is the one that gives you precision. This is the one that gets you in at the best spot. This is the one that minimizes your risk and maximizes your profit potential. So I want to go through the process with you guys, and I want to go through it step by step. The large chart first says that I have odds favorable momentum. It is green and it is screaming in the direction of the trend. The large chart will also say that I have a clear path. Rules 1 and 2 have got to be met, guys. That's what ramps up the success rate. This reversal bar lets me know that some yahoo with his daddy's money is going to fight everything going on, right? Some yahoo that doesn't care about trend and momentum wants it to go down, and he starts to push. And that's cool. We love this guy. And the second that reversal bar prints, I'm going to identify from the highest trigger point to the lowest trigger point, from the upper line to the lower line. It doesn't matter if it's the synthetic on top of the large or the large on top of the synthetic. The tighter they are on top of each other, the smaller this box is becoming, which is the smaller the correction point is. But my window of opportunity, the area where the market is most likely to continue, will extend from the highest point of support, which happens to be this midband, to the lowest point of support, which happens to be these yellow 1-to-1s. So now what I've done is I have defined exactly where the market is most likely to continue. I have defined where that tail is most likely to form on the large chart, but I'm using the small chart to pinpoint it. And this giant yellow arrow says activate a limit order, a tick or two above the highest point of support, and then sit on your hands and pray, because you've done everything that you can do. And if the market pulls back to that limit order, you're in a long trade. You're in a long trade with momentum. You're in a long trade with a clear path. You've entered where the market is most likely to continue. If it goes below your entry, you still have advantages. If it goes lower, they're still there. As long as you are inside of this window, guys, life is good. You have a high probability trend trade. And we understand, and you will understand, and I want you to accept this, that for every 10 of these you take, fitting the rules, you're going to lose 2 to 3. And it's just a part of a positive equity curve, guys. Losses are a normal part of winning. Losses aren't failures. Losses aren't negatives. Losses, honest to goodness, are amazing for learning. And when you take a loss that fit the rules, you've got to learn to be okay with it. But knowing this, we're going to put our first protective stop outside of the window of opportunity. 4 to 5 ticks. We're going to give it a little breathing room because we're good, but we're not like to the tick good some days. And if it goes beyond, we're going to let it hit our stop and we're going to be okay with it. We're going to dust off and we're just going to say next. But my goal for you guys for the first 20 days with me, for the first 20 days with Nexgen is never, ever, 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 ever miss this entry. Never miss this entry. Always focus on finding the best of the best entry when the rules are met. Because this is the trade, guys, that typically wins 70 to 80% of the time. This is the trade that creates confidence through the memory of success. This is the trade that has everything that we look for in a trade. And this is the trade that turns you into a chart reader. This is the one. And guys, the cool thing is once it starts to move in the direction of the trend, I'm going to reduce my risk even further below that reversal bar. Some common mistakes. I see people get in on the reversal bar. All you've done is increased your risk. All you've done is reduce the distance to your profit target. I see people worried that the small triggers have turned against them, and that's okay. That's a natural fear, but I'm here to tell you that momentum is dictated by the large chart. That odds favorable momentum is a large chart thing, guys. Remember, this is just a little dissection. I also see new users afraid that it's not going to get their entry point. And when these tiny little fluctuations on a smaller, faster chart happen, I see them in right at the very top of that bar. And once again, all you've done in this instance, guys, is you have decreased your profit potential and you have increased your risk. These are pretty common and you're probably going to have to work through them. So make sure that you post in the room and let's get you focused on the absolute best of the best. Let's get you focused on getting in where the market is most likely to continue. And we're going to do it with two charts, right? So the large chart has to say up and the large chart has to say momentum and the large chart has to have a clear path. And I'm not circling or I'm not trading tails, guys. I'm trading a pullback to support inside of those triggers. But the cool thing is you can go back historically, and we talked about this a lot yesterday, and I want to do it today too. I want to remind you guys that the easiest knowledge doesn't come from taking trades. The easiest, the best of the best, the highest level of recognition comes from scrolling back historically and looking for your rules to be met and circling a tail. And looking for your rules to be met and circling a tail. And then just go through, whoops, that's a big circle. Once you've circled a couple tails, guys, go to your small chart. Where's my small chart? And let's see. We know that the rules were met on the large chart, so let's look for the first circle. And it's a pullback to support right there at those triggers. And let's go to the second circle. And it's a pullback. That one's a little uglier. Maybe it didn't set up. Maybe that's not my trade. But what I can do is I can keep going back. I can keep looking for these tails. And I can say to myself, this is the best, right? This is what I'm looking for. This is what it looks like. That's a tiny little tail. That probably didn't get an entry because there wasn't a big retracement. But that odds favorable momentum did take it up. And that's what we're looking for, guys, is we're looking for the rules to be met. We're looking for the opportunity to maybe have that termination create a reversal, to give us odds favorable momentum, and then to say to ourselves, my triggers are split. I don't have any lines in the large triggers, but I've got support down here at the synthetic triggers. I'm not going to make a move unless it comes back to an area inside of triggers. And I don't know if it's going to or not. I don't know if it's going to push past a mid-band or if it's going to keep going up. But I know that my statistical advantage comes from the ability to identify areas inside of favorable large triggers when my rules are met. And that ability also comes from being okay with the idea that if I don't have odds favorable momentum, it might not be my trade. But if I'm a little patient, well, then there may be opportunities for me. If I'm a little bit patient, there may be some stuff going on. This is the S&P. Some of you are probably going to show me some of these trades where I take a pullback to support right at the triggers and I'm able to capitalize on the momentum and all that good stuff. So are there any questions about the high probability trend trade? Are there any questions about momentum, a clear path? Are there any questions about the window of opportunity? Guys, all you need to do is study. Go back historically and circle tails when the rules are met and see if they line up with support or resistance inside of favorable large triggers. This is how you're going to get good at reading your indicators. Use your spreadsheet and go take 50 pictures of strong triggers and go take 50 pictures of weak triggers and go take pictures of a clear path and go take pictures of a termination condition and focus on those entries. And what's going to happen is you're going to be able to incorporate the pieces of the puzzle. You're going to be able to incorporate the individual pieces, and eventually you're going to put them together to recognize the whole. When you can recognize these things without the market moving, without the emotional attachment to a trade, it becomes easier to recognize it when the pressure is on, when the market is moving. So that's my first hour every hour, guys. Every day of the week. My focus is getting you guys to learn to speak to yourselves in terms of advantages, to understand when you have momentum, when you have a clear path, when you have an entry area, and then to take that line of thinking and say to yourself, when all of these are present, I'm going to take a trade. And when I don't have these, golly, I'm having troubles here. When I don't have these advantages, well, maybe I don't have a trade. I'm going to give you a plan right now that says this is how you take the best of the best. And I'm also going to give you a plan that teaches you how to take it without one of the advantages present, in this case, a clear path. But if you're always speaking to yourself in terms of advantages, it's going to become more and more difficult for you to say to yourself, well, I don't have momentum and I don't have a clear path. Let me hope this entry area is enough to create a victory. I have momentum, but I don't have an entry area or a clear path. Let me hope that momentum is enough to carry me to a victory. Well, all I have is a clear path, but without momentum or an entry area, what the hell am I going to do with it? And you begin to almost convince yourself that giving up more than 33% of your advantages is not a solid plan. And you're doing that just from speaking to yourself in terms of advantages. So I'm going to give you what's called the KISS plan, ladies and gentlemen. And this KISS plan is a stepping stone in your learning journey. And this KISS plan is designed to optimize your chances of success with the 50-50 trade, with the high probability trend trade. And this KISS plan for you brand new users is going to teach you to be a chart reader. And this KISS plan for you folks that are coming back to me wondering why the hell you can't make money is a great way for you to refocus and to focus on advantages and kind of screw your head on right again if you went a little willy-nilly like we do now and then. And guys, this is just designed to optimize your chances of success. I've had people get funded, do 70-80% winners with the KISS plan by itself. So go back to the idea. If your goal is $500 a day, do you need to be in every move of the market, or does it make sense to be in the best moves to get paid and move on? So this is designed to really keep you focused on the best, and then through simulation, study, class feedback, and continuous practice, you will be empowered to create a plan tailored to your personal goals based on your ability to read your charts. Guys, you will create your plan from this simple plan. You'll take your ability to recognize advantages and turn it into a different, more exciting way for you to make money, probably. But the simple plan for consistency, it says don't fight the large chart. Don't fight the momentum on the large chart. Don't fight the areas on the large chart. Don't fight the direction on the large chart. And if you can pull that off, I'm telling you right now, you are going to omit probably 60% of the most common mistakes new users make. So commit yourself from the get-go. You don't have to fight. It's easier to go with the flow. Define your entry. Make sure that it's your entry, guys. You don't want my entries. My entries don't look like your entries. My plan doesn't look like your plan. John's plan may not look like Mary's plan, may not look like Jerry's plan, may not look like Bobby's plan. It doesn't mean that any of them are wrong. It just means that it's not yours because you're in a different spot, right? Um, Everyone I know loves pie, loves apple pie, loves pumpkin pie. I freaking hate pie. I like cake. So, just because you're eating pie doesn't mean it's wrong. It's just right for you, but it's not right for me. I have a different plan. So, define your entry, guys. Make it yours. Own it. You like wine. I like that. See, and I don't. I can't stand wine. I've tried to like wine. I don't dig it, not even a little bit. Um, I'd rather have a little vodka soda or something, call it a day. But it doesn't mean we can't hang out in the same room and get a buzz on, right? That's kind of the cool thing. And that's what we're doing here, guys, is we're all sitting in this room doing what we like. So define your entries. I've never had anybody use this checklist, and truthfully, and I've got to put that in there, I've never had anybody use it truthfully. Use this checklist to enter the highest probability trend trade and do worse than 70% ever. And I'm waiting for somebody to truthfully do it and do worse than that, and I will eat my hat. But I haven't found anybody capable of making that happen. So print this out, put it on your desktop. Say to yourself, this is what it takes to get me into the trade. And if you're a little unsure, Mark, I'm brand new, I'm still working on these looks, I don't know them 100%. Whoops, wrong one. How about this one? How about if I give you the exact same checklist that takes pictures liberated from the resource materials and says, hey, this is a termination that reversed the market. We're going to call that a good top or a good bottom. And here's a video just to reinforce it. This is my odds favorable momentum. And I'm going to tell you guys right now, Cindy, this is your odds favorable momentum. And Bobby T, this is your odds favorable momentum. And Rob and Troy and David and Bogsy and Paul and Doom and Jen and Gary and Maddie. Guys, this is your odds favorable momentum. I don't care who you are or what your plan is. This is what it looks like. And that's what those crappy little weak triggers look like. So this is pretty universal. You should know this look. No matter what your plan is, that's a termination condition, and that's a clear path. And no matter what your plan is, well, that's not true. If it's a high probability trend trade plan, that's your window of opportunity. And the areas beyond the triggers aren't a part of your entry, right? And if the triggers aren't favorable, one on top of the other, that's not a part of your entry. You're giving yourself the highest chance of success because you want to be successful, because you want to be a chart reader, because you want to quit that job and spend your days trading in the morning and walking on the beach in the afternoon. And guys, I'm telling you, it's a very, very, very obtainable goal. If you do the work, if you study, if you ask for help. Even Tiger Woods had a swing coach, guys. Michael Jordan had a coach. Wayne Gretzky had a coach. Serena Williams has a coach. And they use them, right? They use them. So your job is to use your coach. That's me. I get to be your coach. Guys, once you're in, you've got to manage it. That's the second piece of the puzzle. And the same way that getting into the market was very basic, right? The same way getting into the market was very focused and mechanical and kind of void of opinions and stuff. Let your management be the same way as you're a brand new user, as you're learning to read your indicators. Let your management be just as simple. Allow it to be if-then, because what happens is we get excited as new users and we get nervous as new users and we're like, oh my gosh, this is so crazy. I can't believe that I'm in a trade and I'm terrified to be in this trade because what if I lose money? And what if the market doesn't do what it's supposed to do? And what if? Who cares? Keep it very basic because you're just learning to be a chart reader, guys. And your chart reading and your very simple management plan begins with getting in where the market is most likely to continue. So if you don't understand the entry, management becomes more difficult. But what you'll find is that great entries create manageable trades. So you're in where the market is most likely to continue because you did your homework, you understand where the market shouldn't go 4 to 5 ticks beyond. And you're saying at this point, I've done all I can do. My rules are met, my entry is perfect, my stop's where it needs to be. The market's either going to stop me out or it's not. I'm not in control in that. The only thing I'm in control of is whether or not my rules are met. Well, if you really did follow your rules, more often than not, the market's going to give you a reversal bar in the direction of your trade. And once that happens, you're going to move your stop. You're going to go 2 ticks above it or 2 ticks below it. And then you're powerless once again. Sit on your hands. Maybe the back of your jeans will wipe the sweat off of it. There's nothing to do. You're either going to get stopped out for a smaller loss, and that's okay, guys. That's part of it. Or it's going to hit your first target. And for you guys, your first target is only $100 in the distance. Only $100. That's not a lot with that much momentum and a clear path. And I'm going to tell you that there are traders in this room that never not take their $100 because they know that money in the bank is better than hoping money goes to the bank. So you're going to take this $100. It makes it. You're going to go break even. You're going to give yourself absolutely nothing to lose. Absolutely nothing to lose. And the only reason that you're doing this is because you're learning right now to trust the large chart. You're learning to trust odds favorable momentum. You're learning to trust a clear. Did I call you out, Maddie? I hope in a good way. I just like the name Maddie. Reminds me of Red Dawn. Guys, you're just hanging out and you're waiting. And you have every advantage and you have nothing to lose. And that makes it easier to hold on for the second target. And the second target, once again, for new users, it's not too terribly far off in the distance. It's only $200. And $200 on a 2 lot here, guys, that's a $300 trade. And then it doesn't matter what happens after. You just made $300. And then for you guys whose goals are $300, you're done trading for the day. And for you guys whose goals are only $500, you're over halfway there. And you're doing it from the best of the best. You're doing it from the highest probability. You're doing it with the greatest entries and the most pragmatic thing. And Rob, there's thoughts on Apex, right? There's thoughts on Apex. But if you're worried about managing a funded account before you're concerned about taking the right entries, you're out of order. And if you are concerned about holding for bigger moves, but you don't understand when areas are likely to hold or break, you're not doing it in the right order. And if you're worried about making money before you focused on the process that creates that money, you're doing it out of order, guys. You're putting the cart before the horse, and you're going to struggle. You're going to struggle. It's like going to the golf course and hoping you shoot 65, but you don't know how to grip a club. And it's like going to the ballpark and hoping you hit a home run, but you're not even sure how to swing a bat. And the analogies go on forever. So if you learn the process that yields the results, Rob, you're going to be able to change things all day long. You're going to be able to change the idea about when you move your stops. You may even change the criteria for entry. You may, because you've seen it 100 times, you may say to yourself, well, my large chart has odds favorable momentum and a clear path. Maybe I don't need to be satisfied with $300 on this trade. Maybe there is the opportunity to turn this particular trade because of the odds favorable, because of the clear path. Maybe it's appropriate to hold this one for the big move. But the thing is, though, if you are confusing wanting to hold this one for the bigger move and your change, and the flip side of it is, well, I want to hold this one for the bigger move too, directly in determination conditions, then you're not doing yourself a service. One of them offers momentum and a clear path. The other one says, hey, no more longs. Why don't you get paid? So, Rob, you're going to learn when it's appropriate to get paid. And you're also going to learn when it's appropriate to protect your investment, but the market says it's going to go down more. I know, and it's not just for you. Guys, if you post something in the room that I think is important for everybody, I may address you personally, but guys, it's for everybody. And if you're like, well, that's not for me, then that's cool. I get it. But there's somebody that needed to hear it, Rob. There's somebody that needed to hear that they are going to be so good at chart reading that they're going to understand where the market is likely to continue. They're going to understand where the market is likely to go, and they're going to understand where the market is likely to stop. And this is what's going to formulate their plan. So, guys, that's my first hour. It's the first hour every hour. High probability trend trade turns you into a chart reader. The management's very pragmatic. This will lead you to what we call the 50-50 trade, that one where the areas have the potential to break. It's a very different trade. It's not a trade with a clear path. It's a trade with the hopes, the wishes, and the wants that that area breaks. So there's a way to take it to increase the likelihood of success. There's also a million ways to take it that will screw you up 9 ways to Sunday. The one in this plan is the best of the best. In a 50-50 trade relies on momentum. So it's going to insist that you have momentum on both charts. And a 50-50 trade is more likely to work if it comes from a good top or bottom. So you need to mark yes to at least the first 3 before you even consider. And then it tells you that divergence is a loss of momentum. And if it happens, that you shouldn't take this trade as a brand new user. The likelihood of you losing goes up exponentially. But if it's not there, you're going to use those high probability trend trade entry rules to get you in. And then it reminds you a second time that divergence screws up this trade. And it reminds you a third time in the management that divergence is a horrible way to make a living on 50-50 trades because it's more likely to lose. And I'm telling you, this is the most lost trade, guys. This is the most lost trade. And when you take it, you have to manage it aggressively because it's not a high probability trend trade. And since Bobby's in here, I'm going to show you the picture that I stole from Bobby about taking a 50-50 trade, a very easy, higher probability, medium probability trade. First of all, it comes from a termination that reverses the market. It does have odds favorable momentum, and you can't put no terminations because it's a 50-50, silly. No divergence, perfect entry, quick profits, protecting the investment. And guys, this is the one. This is the one. This is how you take a trade. Bobby, thank you for giving me this. And guys, this is from, what is that, June of last year? And the patterns are exactly the same. He took the pullback to support. Well, the triggers were a little bit below. I don't know. You could ask Bobby. Yep, you're right, David. He broke rules. I apologize, guys. This trade is shit. Shouldn't have taken it. It was Bobby's entry. Wasn't mine. I was more concerned about the management, though, right? I was more concerned about the fact that there wasn't divergence on his entry, that he got paid at the first trouble spot, that he protected his investment. Bobby's entry is Bobby's entry, and you'll notice that he didn't get stopped out, so he knew exactly where his stop belonged. And then David, you'll notice that he got in before the correction spot, not after the correction spot, which meant that even if it came down, he knew exactly where it was likely to correct. And because of this great bottom and because of that momentum, he said, you know what? I'm willing to take it at the fib that lines up with the large chart because for me, I'm willing to risk it on a look like this. So David, his entry is based on advantages. It's based on chart reading. It's based on everything. And his stop would have been below the correction point. Bobby, is that fair to say? You knew where the market shouldn't go. That's where your stop was. But because of the advantage of a thank you for that, because of the advantage of a good bottom, because of momentum on every chart, because of no divergence, it was an acceptable risk for Bobby to take this trade. But he didn't sit and hope for a home run. He made sure that he got paid on the trade. So David, that's not your trade yet because you're still working on it, but it might be one day. But because Bobby knew that this was not a high probability trend trade, he managed it a little differently. And Rob, you know, my brother's got a let it run personality too. And what you'll find is this temperance between your desire to let it run and your ability to read charts. And it's going to open up doors for bigger moves. And it's also going to slam the door shut when things are changing. And you get this cool little dance between what you want and what your indicators are giving. And you'll learn to lean towards what the indicators are giving. And it may even change your personality. You never know. Guys, are there any questions that I can answer before I go stretch my legs for a second? I'm a big advocate of taking breaks every now and then. I'm a big advocate of go stretch your legs, walk away from your computer. Don't stare at the same thing for 10 hours because what you're going to do is you're going to begin to fabricate trades, guys. Oh my gosh. So there's a 50-50 pullback. That one was into a termination. That was a 50-50 with divergence. But it just keeps bouncing off of mid-bands inside of triggers. You just have to decide whether or not your rules are met. And Bobby, you and I both, I've gone back to basics 1,000 times because my brain says complicate it. My brain says do what the people that are doing something different do because it might be better. And you're better at finding support levels. Awesome, Maddie. So I think that you piece it all together, right? You get to this point where you begin to understand where the market is likely to continue, and it really does become a matter of whether or not your rules are met, whether or not that they come together. And man, if you use this spreadsheet, guys, if you use this spreadsheet and you just commit an afternoon to filling it, I think you'll be absolutely floored at what you come up with. And if you spend an afternoon annotating charts and talking about advantages, and don't even worry about the trading, because when you're in a trade, you're emotional as a new user. When you're in a trade, your palms are sweaty, your adrenaline is running, and you might not be thinking clearly. One of the reasons that I appear to be good at my job, give that illusion, is because I don't have any emotional connections to this trade. You had odds favorable momentum. Let's see, 66. So, Jen, here's one thing. Guys, I want you to see how easy this is for me. Because I'm not emotionally attached to Jen's trade, the first thing that I notice is that her odds favorable momentum is down here, but that's her entry, right? And Jen, this is a termination condition that creates a reversal. This is a no triggers through, pivot stop out, and this is exactly what we call a good bottom. It's a no triggers through term that reverses the market. Why is that important? That's important because this trade is more likely to work based on this look. And then Jen is saying, okay, I've got the best momentum ever, even if it's up here, not down here. And it's not high probability because it's 50-50. And then she buys at support inside of favorable large triggers. And guys, she does it, and I'm going to show you this. If you're the trade police, and then Cisco, you have to have Snagit to do it. And then you can't do it on the live market, but you can paste it in here after the fact. The trade police say, but Mark, there was divergence. Jen can't take this trade. Jen's violating everything that we hold dear. Jen broke this rule on divergence. And then I have to say, yeah, it's an after the fact, Cisco. Sorry. Is I have to say, well, Jen's got a little experience reading the indicators. And even though that's a no, this good top or bottom was a yes, and she believes in the power even if she didn't recognize it. And the odds favorable momentum was amazing. And the smalls were outside of the large. And guys, remember what I said, that you will craft a plan tailored to your personal goals based on your ability to read the indicators. What most of you are going to realize is that from a good bottom with strong triggers and the highest momentum ever, this is a beautiful entry. And because this was her trouble spot, that is a beautiful exit. And guys, that is about the easiest money that you're going to make, but you've got to know your rules. You've got to learn your rules, and you've got to find success in the basics so that you can know when it's okay to fudge them just a little bit. And guys, I'm going to tell you right now, everybody fudges rules. Most of you fudge it because you hope to win, but you'll get to a point to where you fudge your rules because of your chart reads, because of the advantages that are in place. So I'm going to show one more thing and then I'm going to take my break. And guys, I'm feeling super chatty Cathy today. Sorry. And this is for everybody now that we've gone through the rules. Guys, everything is about the foundation. Everything is 100% about building a solid platform. So as you guys grow and begin to learn the software and look for things, make sure that you're revolving around advantages, right? Make sure that you're revolving around having those concepts in place that can be proven to win more than they lose, and just take the burden of guesswork off of your shoulders. So for you new users, I blanket with very conservative rules. The high probability trend trade is a very conservative trade. And for the brand new users, all termination conditions are bad. And for the brand new user, no momentum is horrible. What are you doing? And for the new user, any area not inside of a favorable large trigger, shame on you. You're going to get the yardstick to the back of the hand. Why do I do that? Because it increases the likelihood of your success. Guys, the odds of you being with me 30 days from now go up tenfold if you keep it simple in the beginning. And then just like anything, the more time you spend with it, right? Exhibit A, the more time you spend with it, you begin to piece things together where the advantage is still present. And you start to take trades that are a little outside, and this opens a lot of doors for you because you're now a chart reader. And one of the biggest challenges is when new users sees older, more experienced users taking trades that don't fit the rule. And David, I know you were just seeking knowledge, but David pointed out instantly that his entry wasn't inside of favorable large triggers, which is awesome because it means that David's focused on David's rules. And he's trying to question, well, how am I going to find the same opportunity that Bobby took where it didn't look like it fit the rules quite as much? And the reality is David, you're going to get there, but you may not be there yet. So it's okay to keep it super simple. And once you get a little time watching the patterns, you're going to start to recognize these things, and you will become a little less rigid, and you will be able to manage a little more aggressively, and you will be able to find more opportunities. But you've got to learn the process that yields the results first, guys. You've got to learn the basic, the chart reading, the easy. And it's okay to not keep up with the Joneses. You know, Bobby's been doing this for years. I've been doing this for years. It's not really fair to yourself to put the pressure of perfection right there in front of you if you're brand new. That would be like taking a first-year engineering student and say, I need you to go build this bridge that millions of people are going to drive across every day. Good luck, you know? Or that first-year medical student, hey, what do you say we go pull an appendix out today? I mean, hell, you paid for the school, so you should be good, right? And guys, that's not realistic. Question everything. Everything. Question everything. If it doesn't seem right, ask about it. If it doesn't feel right, ask about it. If you're not sure, ask about it. And then it's going to be those efforts, guys, that's going to get you exactly where you want to be. So I'll let you guys stare at crude oil for a little bit, directly into a termination condition, directly from a termination condition. And there's a termination. Oh, man. Consolidation. And that's it. Joel, coming to terms, being okay with the trade losing. You know, Sun Tzu in The Art of War said that you have to put yourself in the kill zone in order to be victorious in battle. Every time you guys trade a high probability trend trade, you will put yourself in the kill zone. The potential of your death is imminent. but the likelihood of it goes down dramatically because of those advantages. So I'm gonna go, I don't know, probably high five my wife or something, but I've got to get away from this computer monitor. When I come back, we're going to look at your trades, guys. We are going to talk about advantages. We're going to look at entries. We're going to look at exits. I'm not going to judge your worth as a human being based on your ability to make money. We're just going to talk about advantages. And if I see an opportunity for you to do something a little better, I'm going to make sure that I mention it. If I see something that may rob you from success long term, I'm going to mention it. So, guys, go stretch your legs and breathe through your eyelids. I'll be back in 5. How are you, Mavis? Did Mama go get coffee? Did Mama go get coffee? Did she leave you here all alone? Mama, she'll be back. She will be back. This is celebrating some peanut butter. You want a treat? Does she want a treat? Love you too. I'll see you in a little bit. All right, guys, I'm back. Maddie, I'm not sure that we have a lot of crypto traders in here. I know there's a few people that have. I'm just not sure who it might be. So, guys, I'm going to scroll up to the top of the room. We're going to start looking at your posts. We're going to look at your charts. We're going to see what you're doing and see if there's anything I can do to help. That's really kind of the second half of the day, is just trying to be helpful. And I always want to remind you guys, if for some reason I miss a chart, if I miss your post, just let me know. And I'll do my best to go back. And then Paul, I love this. Paul, you're just doing some chart reading, right? Paul says, oh, look, that's a termination. But Paul, not a strong bottom. It never gave a reversal. So let's go through all the different things that we read and see what we can do. The cool thing is, Maddie, is that the patterns are the same. Like the pivot stop outs, the terminations, the momentum, the entries. They're all very, very similar. I don't have enough experience with crypto to know if there's any nuances for entries and stuff, because sometimes it's emotionally charged. But I know that the foundation works. My brother has spent some time with it, and he's even built workspaces for crypto. If you go through, I took mine off, but in the stock, in the basic workspaces, there are crypto workspaces. All right, let's go back to the small screen and make this one bigger. So you're welcome. And if you need help with that too, reach out to my brother. Go, hey, John, I heard you've done work with crypto, because it's different time frames and stuff like that. Rack his brain. He'll share everything he has to help you be successful. He's pretty good like that. So 3 divergences on the chart, absolutely, is a termination condition. And when those 3 divergences happen on a larger chart, Paul, it very much creates the potential. And this is what I love about your picture, is that it is very much the potential for bigger moves the other way, but it's never guaranteed, right? So you're showing me a chart that is termination, determination, determination. And there's all this just nastiness going on. And there's just nothing to do really until maybe down here. And here's the one thing that you guys have to avoid, and I'm not sure if you did this knowingly, Paul, is here your triggers are above the 1-to-1s, your large triggers are up, you're coming off of support, you've had multiple divergences, everything is rolled to the upside, and you said this is the only indication of going short. So, Paul, without any sort of emotion or anything like that, that pivot stop out there right off of support that rolled everything, that pivot stop out that coincides with support with all the triggers above it and a higher divergence, that one, then that pivot stop out right there, right back into support with everything green, that's the one where you should have gone short then, right? I know. And here's the deal, Paul. Because this happened, you think this was a trade. Because it went down from there, you think it was a trade. And your brain is telling you, Paul, find the entry, find the entry, find the entry. And here's the challenge with what we do. You couldn't sell me in a million years going short with that look on the large chart. You couldn't sell me a short in a million years above all of this nonsense here. There's no way. If you said, Mark, there's your short, I'd say, Paul, stop smoking crack. It's making you weird, man. Does that make sense? So let's look. That is into an area. That is into an area. And then this right here is right into a termination condition. Oh, and here's one of the hardest truths about trading. That's not my money. My rules were never met. And guys, sometimes this happens. Can't stop the crack. Sometimes this happens. Sometimes, no matter how much you wish that there was an entry, there just wasn't one that gave you an advantage. And sometimes the market screams down. But let me give you the other side. When the back of this bar clears support, when you have odds favorable momentum, there are some people allegedly that will capitalize on these little moves with that momentum. So Paul, maybe there was a momentum-based opportunity once you got below everything, but if you don't have a plan for it, it may not be your entry. It may not be yours. I can tell you that I tried to emulate this trade for quite a while, and it blew my ass out 50 times before I finally came to terms with it and realized how to take it. So keep doing what you're doing. Keep questioning. But remember to go back to the rules, right? And sometimes you have to ask yourself, is smalls above the large, is everything green coming off of support with everything up? Even though the market went down, is there really a good short there? Because that was a pivot stop out as well with the same conditions. So great stuff, man. Great picture. And I love that you're going through this, and I love the ability to talk through it with you as well. That's good stuff. All right, dumb question number 1068. David, there are none, I promise. Is there a way to pop out your window without all the other stuff? So try this. And let me see if I can do this. Down here is full screen. And that makes the whole thing bigger. But if you click on this one, woo! It gets about as big as it's going to get. So I'm not sure how big your monitors are or anything, but I'll show you the picture of mine. And whoops. Let me take a picture of my screen over here. And this is on a 27-inch monitor off to the side. But that's pretty big for me on a 27-inch. Works out pretty well for me. And then, of course, you can make it on a bigger one if you want. You can go to a 32, something like that. But going full screen and making sure that you've maximized everything as big as you can make it. Other than that, I'm not sure if there's any way to make it any bigger. Hope that's helpful. All right, who's next? Today's the 18th, right? I lost my stuff. Cav gave us one. Let's see what Cav gave us. It shrinks. Okay, so do this, David. Here we go back. So you're probably on this page, right? Where it's got all of this stuff. Let me pull mine back up. So down here, right at the very bottom, there is a way for you to pop out, if you will. Whoops, I'm trying to get this stuff back to where it needs to be. There's a way for you to pop out. There's that little square with an arrow, and it'll put it in a separate screen. It'll let you have two screens. So if I hover over, you can see that I've got the traders chat, and then I've popped out the education into another one. Clockwork Orange. No worries. Take care, JW. So hopefully that's helpful. And then Cav came in and gave us this one. And Cav says, that's pretty much a term. There's a Hyatt divergence. Cav, are you in here? I'm not sure if you're back in here yet. Yeah, control plus or minus. Thanks, Muser. That may help. Guys, this is not a pivot stop out. I want to be clear on this. This is one of those misunderstood things. In order for something to be a pivot stop out, price has to come back to a divergence low, go below it, back above it. So in order for it to be a pivot stop out, first there's the pivot, and then there's the stop out. And guys, this is the pivot stop out. Look, all this is, where did his go? All his is just a higher divergence, which is a pretty good indication that things may be going up, just from a definitions. And then he says, with odds favorable, I'm going to try and trade the breakout. So I let the small triggers get above, I let it pull back to support, and on its way up, I giddy up, and there's that quick profit, right? So Paul, the way you're like, was there an opportunity in there? Sometimes on these momentum trades, you just get paid quick, and then you head off and you wait for that next trade. Almost every momentum trade that fails turns into a trend trade. Not all of them, but a lot of them. So being willing to manage, understanding that that's a possibility, makes it easier for you guys to be willing to exit when there's a loss of momentum on momentum, or be willing to exit at the trouble. And Cav, if you watch the video later, great trade. I like it. Gino, let's see what you got. Gino, not at all what I expected you to look like. I don't know what I expected you to look like, but it wasn't that. All right, so let's take a look at this real quick. Boom, boom, boom. All right, Gino, first things first. Could we agree that that is a pivot stop out at the bottom? I think Jen took this same one. That's a termination condition, isn't it? And there's no triggers through. Gino, you've got a strong bottom, my friend. No triggers through termination that reverses the market is what we're going to call a strong bottom. So it was even better than you thought. And you had odds favorable, and you hadn't reached the divergence high, and you exit just above the mid band, right inside of triggers. Took profit on the quick snap of the small triggers instead of waiting it out with divergence on the large chart. Beautiful entry, Gino. Great read. Awesome advantages. Life is good. No divergence. Perfect entry. It's a pretty trade. And let me give you one little something here. If price doesn't reach it, it's a target. If price doesn't reach it, it's a target. I don't care less. I couldn't care less about this divergence until price reaches it. And then it becomes a termination condition. Until that happens, that's a target for me. That's 100% a target. That's where I expect the market to go. That's my first trouble spot. And these divergences are solid numbers. They're not areas. They are 100% to the tick numbers. So if I come close, I couldn't care less. If I hit it, it's a termination. And this is just my first trouble spot. So when I've got a termination that reverses, the perfect 50-50, the amazing entry, virtually no risk, man, you couldn't pull me out of this trade until I at least smack into that divergence. Does that make sense? Beautiful, beautiful trade. Little management opportunity to get you a little extra out of these really pretty trades. I love that. And I like that I can blow your charts up now. It's like Christmas. All right, back up to the top. Dun, dun, dun. Dun, 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 dun. All right, here we go. I Forgot to look at a timestamp. If I miss a chart, guys, let me know. Sometimes I get confused. Cav. This is where I have challenges. Strong triggers, clear path. That is strong triggers directly into a termination condition. Now the entry makes sense. It's support inside of favorable large triggers. And yeah, hung on way too long. And guys, I want to show you something. And Cav, I don't know if you're back yet. You said 11. If you were going to take this trend trade, there's the correction point, right? Does everybody see that? If you were going to take this trend trade and you get this little pullback, that's where I expect it to go. Maybe the mid-band at the best. But I'm losing momentum. I don't have areas inside. Holding on to a trade for this long is going to destroy you. Holding on to a trade this long, guys, that went from 032 down to 99.5, which means that was almost $400 lost because of hope. $400 lost. Everything turned against it. Everything turned against it. It went beyond the correction point. It went beyond anything solid. Guys, that is almost $400 lost. And people tend to do that when they're like, let's just see what happens. I'm on sim. Let's see if that fib bounces. I'm on sim. Let's see if I can break every rule that I own because I'm on sim. And guys, what you're doing right now, if you're doing that, if you're going batshit crazy on simulator, you're creating muscle memory. You're putting yourself in a position to not give a flying F about your equity. You're teaching yourself that it's okay to do that. And I encourage, I don't give advice, I encourage new users to practice the way they want to play. Practice the way you want to perform when it's live. Add a termination condition. Lackluster, but improving momentum. All trigs through. And man, there we go. Now I can do it again. Manage tightly. Squeeze the neat hundo out before divergence printed. So Gino, once again, dude, you have a strong trending market. I love it. Everything says up. The market is screaming, and it's just strong trending. That's all it is. And the fact that you let the small triggers get above the area, and then you trade from the area, trying to take advantage of that strong trending market, your entry is brilliant. Your entry is brilliant. The fact that you're in on this bar pulling back to it instead of this bar into it, and all you're saying is, man, the market is just screaming up. Let me get on the right side of things, but I know that these things end. Let me make a little cash and get the hell out. Just rock star, Gino. Absolutely perfect. If you're going to do that trade, you couldn't have done it any better. And then Haji says, you know what? When a termination reverses and everything says down, I'll try the momentum trade. And Haji, are you in here? And we're going to take a page out of Gino's book for this one. Your best entry, well, the triggers weren't through. Maybe not. Sorry. I was going to say your best entry is probably off the one-to-ones, pulling back to the one-to-ones and going down. But you let it clear. I like it. And this is where when I'm on a trade like this, so if you're in at 66 and a quarter, 66, no, that's 86 and a quarter. Right here at 82, is that right? 82, 81, I think. 66 and a quarter, 81 and a quarter. So right here, this is $100 a contract. And I want to take a little piece out of Ron's book, actually. These trades don't last, right? These momentum trades rarely run forever. These momentum trades tend to dissipate faster. And you can actually see it, which is kind of cool. And you'll get to the point where you can do this. Here, all of your bars are outside of the small triggers. Here, your bars are all the way inside of the large triggers. That's telling you that momentum is going away. And I know this happens fast on the NASDAQ. So think about it this way. What was that? 10 contracts? Make a grand, quick, conservative momentum. Yeah, dude, not for this trade. This trade is literally trying to capture a moment in time. Does this make sense? You're trying to capture the best of the best momentum. The second it closes on the wrong side, even the second it gets to the wrong side, you're starting to have problems. And it's okay. It's okay to take a grand, because the cool thing is you come back to the best of the best entry, right? Freaking rock star entry. And you made all that money in the exact same range. And then when it looks like this, dude, this becomes your first exit, right? There's a time where it's appropriate to hold a little more. And there's a time where you got to get the hell out, because it's probably not going to last forever. Both entries are awesome, right? Both trades are beautiful. One trade, I think, isn't the hold for dear life trade. And then the next trade is the to hell with anybody that tries to get me out before Fibonacci support. So hopefully that's helpful. Two beautiful trades, two management opportunities, right? That's your first sign of trouble on the perfect trend trade. Nicely done. Really great trading. I just think that there was a little opportunity for you to catch a little more out of it. So I thought I would point it out. Let's see who's next. Odds favorable. Look at the split triggers. Ginormously split triggers. But, oh, it's my favorite word. But. Mark, I know this is a crap look, and I know that I lose this one. And I know that it's not advantageous, and I know that I should wait for some level of confirmation. But it's high probability trend trade. It's high probability trend trade, Haji, when you have an area inside of favorable large triggers. It is not high probability trend trade when you start having these huge just gaps in between. In the second one, I will never say that you should have, but I certainly will say that you could have, because of the momentum on the large chart. And I remember that trade because I got out at the divergence low. Everything about the large chart said it was going. So yeah, that was an opportunity to hold for a little bigger move. It would have made sense. And then Haji, this is your look, brother. This is the one that gives it all back. And check this out. Oh, man. You got your steel toes on? Because I want you to kick yourself in the ass a couple times for this one. You take the entry with the look, and you're like, but it's a high probability trend trade. I'm going to take this freaking entry. And then the market says, dude, Haji, we are so stoked on everything that you've been doing lately. We're going to give you a reversal bar. And we're just going to give you this opportunity because children love you and men want to be you, to have virtually no risk on this trade. And then it comes down. right? And it says, Haji, seriously, like we're trying here. We want you to reduce your risk. Let's give you another shot at it. And you don't. And then they're like, okay, Haji, let me give you another red flag. Let me give you a second lower divergence. And just maybe that'll give you a shot to get the hell out, maybe break even. Because Haji, you're something special. And you said, haha, and it comes down and it starts to go up again. And look at this, it's changing. And the smalls are still down. And you go, okay, I'll put it behind the reversal bar. Yes, I do. But isn't that amazing? And have you guys heard that joke about the guy in the flood? I hope this doesn't come across offensive to anybody, but I think it's just kind of a wonderful little parable. The guy's sitting on his roof in a flood, and someone in a rowboat comes up and says, "Hey, get in the rowboat. You know the flood's here, and you're stuck on your roof." And he's like, "No." He's like, "No, God will provide, and I'm not gonna exit." And then a guy in a speedboat goes, "Dude, seriously, the current's strong, and get in the boat and let's get you to safety." And he goes, "No, the Lord will take care of me." And then a guy with a helicopter drops a line to him. It says, "Get in the helicopter. This is imminent death." And he goes, "No, I've been praying and I'm good." And the guy dies. And he goes to heaven. And he goes, "Lord, I trusted in you. I loved you. I prayed to you. How could you let me die?" And God goes, "Dude, I sent you like a rowboat and a speedboat. And there was the announcement of the flood on TV, and the helicopter came, and you refused them all. And bump, whatever." And a lot of times, guys, you've got to be able to accept these signals. You've got to be able to accept the idea that every trade isn't a home run, that every trade can't be the best of the best. And your chart reading is going to let you know when that's going on. And you've got to have a willingness to lose and stop being willing to die in the wrong trades. And I know because I've done it. I've done it. If I say you're doing something silly, it's because I recognize it from my own behavior. So Haji, one of them, absolutely beautiful. One of them railed in hope. So tomorrow when you read your charts and you look at your annotations, talk yourself through that the way we just did it. JW says termination, weak triggers, divergence, odds favorable. Oh, he takes the entry right to the small triggers and he gets paid. Beautiful trade, JW. And man, JW's trades all look the same. Jen, termination, reversal, odds favorable, triggers come through, pull back to the area in question for a momentum style trade. You held through the areas because of the level of support, and then when it started to weaken, you got out. Jen, you're starting to find your balance. Pass the plates, guys. Jen, have you noticed that you're starting to find your balance a little bit? You're starting to find that little happy place between being super conservative and super aggressive. And you're starting to let your chart reads dictate. Beautiful work, beautiful work. And guys, I'm telling you right now, take a second and recognize your forward progress. Take a second and celebrate your victories. Take a second and be happy about the progress that you're making. I see it every day in every one of you, but it's really hard to see in yourself. So make sure that when I'm like, man, great job, take a second to go, hell yeah, that was a great job. Awesome. All right, Jen, playing the close enough game. And how about weak triggers with divergence, whether it's a good bottom or not? The expectation is the midband. So you grab that little momentum style right off the large triggers and you're out of trouble. And this is beautiful. That's the same trade from 2004. And it is back in your repertoire. All right, bad bottom, odds favorable, 2 divergences. You take the perfect entry and you get run over. Oh, but you're on the NASDAQ. You're on the NASDAQ. And man, Haji, I like it. On any other market, that is the perfect entry. On the NASDAQ, it is almost guaranteed loss. What do you think? They're less than a full bar away, right? Look at this one, right above the one-to-ones with them a full bar away, closes the gap. Here, they're less than a bar away, and you get absolutely slaughtered. And I even added a couple to the NASDAQ section in the spreadsheet today, guys, because I was taking pictures for you. Check this out. When it looks like this, I'm in at the area every time. When they're less than a full bar away, this is the most likely opportunity. This is where it just keeps going, because it's a 13-2, not a 5-1. And then the other one is when it does close on the correct side, well, then you at least get an opportunity. Your risk is established, right? And this is the one that at least gives you a fighting chance. And I missed the best one right there. So great lesson on that one. I think that it was an awesome look, Haji. I really do. But I think what you ran into is when you finally took the entry, because it's the NASDAQ, the small triggers were just working against you, and you have to be a little patient at that point. You have to wait for it to slow down a little bit, because remember that your small chart on the NASDAQ is a large chart on any other market that you're trading. And then Roku, good top. All indicators are flying down. The momentum is outstanding. You let it get below the fib, and you didn't want to come out. Momentum was too strong, and you held it all the way until the momentum went away. And Roku, it looks like you and Jen are taking the exact same trade here with the same results and the same great chart read to get you to that target, trusting momentum a little bit. And then JW is the king of weak triggers with divergence, most likely to get to the mid-band. Let me find an opportunity. And then Haji, do you see the quick profits on this one? JW does a great job with this. He's got a lot of experience reading the indicators. Do you see how he doesn't even wait for it to slow down? He says, I can go from 57 to 59. I can make $100 a contract, get the hell out, and wait for the next best. And I'm a huge fan of this one. And I learned that idea from Ron. Because when you know that it's momentum that got you in, we all understand that momentum doesn't last forever. We all understand that momentum does eventually go away. So if you carry that into your trade, if you carry that idea into your trade, what it does is it keeps you from hoping for these home run moves when it's not a home run trade. And then Jen, 50-50 divergence, split triggers, and you said, I'll wait. Nice job, Jen, following your rules. And then Muser, really good bottom, wide triggers, odds favorable momentum. It's a 50-50, and it's split triggers. And you're like, man, they didn't smash. Divergence right from the fib. Huge correction point. All I have is a little green line floating in the middle. And then M-User, your willingness to say, you know what, it's just not my trade. My money is worth a better look. My money is worth a better setup than this is outstanding. Reversal bar marker, Bobby. And that's NASDAQ exclusive, the reversal bar marker. And if I have NASDAQ traders that want to talk about that, we certainly will. And man, this is so hard to do. M-User, so just seriously, props, man. Great job. Saying my money is worth a better entry. My money is worth tighter triggers. My money is worth a better setup. And then Rob making me proud. Is there a reason price touches the divergence lines? Because someone pushed it there is the best answer, Rob? What is divergence? Divergence is a loss of momentum, right? So let's break it down even more. Let me take a picture of a picture. Are you with me, Rob? Make sure we're not on break. All right, I'm going to use a couple arrows. Price screaming to the downside is the sellers in control. And then from that look, the buyers take over. This is the beginning. So the first thing that I want you to understand is that the buyers took over. When the buyers took over, there was a loss of momentum. And how this becomes important, why it's not until 3 bars later, Rob, is because there's calculations that have to be run. We don't know that there's a loss of momentum right at the moment. If we did, that would be cool. That would almost be like prophecy. So what happens on divergence is when price pushes down and the buyers take over, your software is running calculations. And it's using these MACD BBs. And notice how price is going down, but your MACD BBs are going up. So what this is, I don't know, Rakesh, I can't see your chart. Give me just a minute. And I'll get you there, I promise. So this calculation becomes true because a couple things have to happen. The buyers have to push, right? The MACD BBs have to confirm. And that's why it's really that third bar up here. This is where the calculation is done, is right about here. But what happens is this is a very specific, a very exact line where momentum was stolen. And it doesn't mean, just because there's one loss of momentum, it doesn't mean that the sellers quit. It doesn't mean that they don't want it to go down. It just means that there was a lot of buyers there that stole it. So a lot of times your sellers will fight back. And they'll push back and they'll try to go down again. And the buyers will give them this little false sense of security. Ha ha, you got it. And then from there, they will absolutely unload. So price comes back to these areas because the people that were originally in charge aren't willing to quit. And then pivot stop outs are so damn effective because the buyers already said, dude, don't try it. And when they did, they said, we told you not to try it. And off it goes. Does that help a little bit on the understanding of it? So it's a loss of momentum, and it takes a little bit to understand. But even on your small chart, you can kind of see it, right? Little fluctuation up. And when they get back to it, the first thing that happens is the market bounces up a little bit. So pretty cool. They have different triggers than what, Rakesh? Help me out here. They just look different. Oh, you've got something else added on there. Rakesh, it looks like you've got small triggers, large triggers, and then what I think you did is you put the NASDAQ 13.2 template onto your S&P 13.2. And the NASDAQ 13.2 uses large and synthetic because it's an entry chart for the NASDAQ. So if you put that NASDAQ 13.2 on just your large chart, you're running with too many triggers. So what you need to do is right-click on your large chart, go to templates, and make sure that you have the Nexgen 13.2 Rinko bar chart. And that'll get you squared away. Ta-da! Great question, Rob. I like questions like that. They make me think through the technical stuff a little bit. I'm not a technical kind of guy. And then Paul, momentum got you. Trend trade worked. So the momentum trade didn't work off of the outer band. And then it came down to the lowest point with divergence on a 50-50. And then you take it from there and it gets you up. So this goes back to failed momentum trades typically turn into trend trades. Nice one, Paul. And you've either got to be willing to lose the momentum trade, but that knowledge maybe gets you into the next one that gets it all back. And then Jen, we already saw this one. Right? Nope. Same look, different. No, we did see this one because we talked about the good bottom. And then Paul, termination, odds favorable, 50-50. Just didn't pick you up, huh? You said on a 50-50, I'm going to go closer to the synthetics because of the split triggers, and it just didn't get you. And you got to be willing to do that every now and then. Bummed you missed it. You wanted to go here, but triggers are inside, not your trade. And this is one, odds favorable, clear path, areas inside. I might be willing to take that one. All right, Miss Cindy. So, bad top, odds favorable, 3 divergences, termination, and you go short and carry it down. You did have momentum. You did not have a clear path. Cindy, do you recognize that? And I'm not beating up your trade. Your trade is your trade. But I've got a bad top. And I'm just going through advantages, guys. That's it. I've got a bad top, which means that a 50-50 is less likely to work. I've got 1 divergence, which means that it's less likely to work. I've got 2 divergences, which is even worse. I got 3 that says it's probably going to hold and go back up. And you get in and you let it overrun all the way up to these 1-to-1s, and you hold it down to support. This is terrifying. For me, it's terrifying. You had so many red flags, and the market said, let's let her win this one so that she continues to do this. Are you with me in here, Cindy? Because the question that I have is just based off of this right here. Trading into the magenta 1-to-1s, which we know is a termination on the NASDAQ, 50-50, and way on the wrong side of everything. If I told you that I was going to enter on the wrong side of everything into a termination condition, you would probably coach me, Mark, you're taking some chances here. You're maybe not giving yourself all the advantages. At this point, the market gave you a full reversal bar against what you were hoping was going to happen. And then if you were going to continually coach me, you would talk about 3 divergences, and you would talk about not having an area inside of these triggers, and you would say you're so far beyond the potential correction point that you are literally 8, 6, 120 per contract beyond. You're 24 ticks plus above those 1-to-1s, and you're putting all of your faith into these 1-to-1s when every indicator on every chart said, Cindy, this may not be your best case scenario. So I'm glad you won. I mean, hell, even you got a white bar off the termination condition with stranded sellers, and your trigger lines are going. There's so many reasons that this trade is a rough trade. You forfeited almost every advantage that we have, but you won. So congratulations. I think it's less likely to win if you took a picture of this exact same scenario. If you took 10 pictures, I think more of them would probably bounce up. Let's see. That one bounced up off support. That was a termination. Weak triggers. That one bounced off resistance. That was a termination. Even with odds favorable, that was a termination, and that reverse. So maybe it's less likely to happen. That statistical advantage begins to go away. Paul, termination, momentum. You let the area break with the clear path. I don't know how you picked your entry there. Quick profits. Nice job. I'm not sure what with 3 divergences got you in on the wrong side of the fib at that particular spot, but I'm glad it did. Way to catch a winner. All right, Zorro. Best momentum ever. You let it break, pull back a little early, and then off it goes. So all this really is it's into a termination with all the momentum. It's just a trend trade, and you were a tick off when you came into it. So yeah, trading with momentum, trading with direction, trading from the area, appropriate stop placement, getting paid. Nice job, Zorro. And then once you're a chart reader, when you have a termination, when divergence prints, clear the area. Let's get back. Let's get back to the trouble spot, Ron. I find myself during the day, true story, I find myself during the day when I'm getting into trades that fit my rules, not necessarily aggressive trades, but trades that fit my rule. I'll show you an example of one that I took this morning. I think that was it. Where I've got my termination and I've got my reversal and I get to the right side of things. And I literally look at that reversal bar marker over here, Ron, and I'm like, well, Ron's trade says at least to here. And that one, of course, let me hold on a little more. But guys, I learn from you as much as you learn from me. I recognize the advantages that you guys put into place and incorporate them into my trading when I see that they're thoughtful, that they're planned out, that there's some research that goes into them. Because I'm not the only guy that can do this. Another missed momentum followed by a trend trade. There you go. Is this Paul? Paul, this is you, right? I don't know if you're in here. Maybe you'll watch this later. How can I have a momentum trade if I don't have momentum? How can I have a momentum trade if the smalls are inside of the large? And even more so, hold on. Dun, dun, dun. How can you skip a high probability trend trade because the smalls are inside of the large, but be willing to take this one with the smalls inside of the large from the wrong side of everything, or be willing to take this one with the smalls inside of the large? So there's a consistency factor there, a little bit. And I don't know if you're watching this, but we see this phenomenon a lot, guys, where you'll take one trade and then in the same picture, the same day, the same breath, you'll say, well, this isn't my trade because of this condition. And it's inconsistent, which means that maybe the rules either aren't understood, they're not proven, or maybe there's a little more emotion to it than you care to admit. And guys, I notice these things. I notice patterns in you guys, things that you do. And once again, the smalls are inside of the large. It's directly into, well, this one's not. So this is a 50-50 with weaker triggers. and no areas to trade from. And I have trouble. I have trouble embracing and endorsing momentum trades when there's not momentum on all three charts. All right, Zorro, you do have momentum from a termination condition. You jumped in early and you got stopped out on the low tick. And he has a memory. Yeah, man. I remember pretty much everything, guys. Sorry. So, Zorro, are you with me in here? One quick little easy lesson. If successful trend trades come from the areas inside of the triggers, do you suppose that you would have taken a loser on this one had you embraced the idea that trading from an area creates a better advantage rather than trading from the triggers? And this is the only lesson I want you to get out of this, because you're trading into a termination, but you're doing it from a good bottom. You have momentum. There's no divergence. You have strong triggers. The only thing that got you was waiting to trade from an area. And because you didn't trade from the area, your risk is minimized dramatically. You're not willing to let that thing marinate a little bit. Does that make sense? Because if you get in at that fib inside of the triggers, there's no doubt in my mind you don't get stopped out. You don't put 4 ticks on that trade. You say, I got to let it breathe a little bit. And then that thing just runs. And these are the ones that hurt a little bit, right? And you get that sadness feeling. But it shouldn't be. This is amazing because now you know how to fix it, right? Embracing the idea that the best trades come from areas, right there at those triggers, and that it's not actually the triggers. Triggers are like clouds. They're where I expect the market to correct, but when I give them something solid to bounce off of, life tends to get pretty good. 13.2 triggers go weak. That's a 21.3. So let's go to your 13.2. Odds favorable, clear path, perfect entry, quick profits, second higher divergence tells me to sit on my hands. Paul, beautiful. Perfect entry. Love that you got paid, but that second higher divergence, and this is just a great lesson again, Paul. When I get a second higher divergence, for me personally in my own trading plan, because of the repetition and the pictures that I've taken and the study that I've done, I know without question that a second higher divergence here might push the market up a little bit. So I choose to exit. I choose to exit with a second higher divergence. And if I get a signal, like a reversal bar, and my rules are still met here, well, I can just take another shot at it. And this is one of those things, and I'm going to drop this PowerPoint in the room for you guys. So everybody that's working on management a little bit and still trying to come to terms with a couple different things, if you scroll to the back of the PowerPoint that I just put in the room, it talks about where stop should go. And because we get caught in the moment, Paul. But this is where when you know exactly what it takes to get you out, right? So I'm in this trade, and the second I'm in this trade, I know exactly where my stop movement goes. I know exactly where I'm going to get stopped out if the market goes. I know exactly what it looks like for me to take an exit, and I know that if I get another signal and the large chart doesn't change, well, I can still take that trade. And I know that if I'm short and a second higher, I'm out. And if I never get that bar, then I never take that next trade. And it's kind of cool because the more in tune you are with your exit strategy, and it takes a little while, guys, a little longer than the entry strategy. What happens, Paul, is when you're in this trade after one divergence and we get down here, your brain is already saying, hey, Paul, remember, if we get a second divergence, that's an exit condition. And you're like, you know what? Let me move my stop where that third bar may print, where that divergence might be true. And you're just willing to take the exit per your rules. And it takes a while to get that way, but you've got to know your rules. You got to know exactly what it takes. Otherwise, that emotion goes in there. Otherwise, you start getting this idea that I hope it goes, I think it might go, I want it to go, rather than my rules say. Same thing, odds favorable, one divergence, perfect entry, 98. I like this one. You waited for the areas on this one, Zorro, and then you're able to come down. And when you hit that fib, when you get to that fib, that's a great spot for profits. I like that you didn't give much back. I love getting paid at the area when all the triggers are above it. Great job on that one, Zorro. And then Joel. Odds favorable, clear path, one divergence. The only critique, Joel, the only critique, since you didn't annotate, is that your area for entry was beyond the correction point. The area for entry, the area that you chose, was beyond the correction point, beyond those triggers. And that, for me, means that I don't have that perfect storm. I don't disagree with your trade. I think that the large chart looked beautiful, right? You had everything that you wanted. Even your small chart was pretty solid. And your stop makes sense. It's a good shot, but I'm obligated to say that once you're beyond that correction point, you are outside of the realm of high probability. But good stuff. All right, David, are you with me in here? Other David, David Bout. You asked me if this was a good read. Didn't you? Different David. Sorry, DL. David Bout. There's no read on it. How could I know if it's a read? How could I know what you're seeing? How could I know what you're thinking? How could I know what you're feeling? How can I coach you on this if you don't tell me what you think? How can you ask me if this is a good read if you don't tell me what the read was? So let me do the read. I see that the trend is down. So as somebody that's not winning more than they're losing, I'm thinking only down. That's the first read, if I'm looking at this chart and being truthful. My second read is that my small triggers are down, my large are down, and they are anything can happen, but all pointed down. So for me, I'm probably not going to fight that because I'm not that good. And then, hold on, I have a clear path down to get to the next area. So guys, please, somebody correct me on my read if you see it. Hold on. My large are down. My synthetic are down. My trend is down. The only thing that says up is the smallest indicator of momentum I own. So, I don't know what you read, David Bout. This is my chart read, and I would be asking myself why I wasn't short from here where everything said down. And I would ask myself that if I was really going to take just a shot, why didn't I just go with direction? Why didn't I go with the trend? Why didn't I go with every trigger line down from resistance that's likely to hold because all of my triggers are below it? So, guys, my apologies if that sounds dickish. But if this is the recipe for the highest probability trend trade ever, and the market is not coming from a good top or bottom, and I don't have momentum on both charts, and nothing, I can't mark anything that says yes, guys, it's okay for that not to be your trade. Does that make sense? So why am I doing this? Why am I going back to this? I'm going back to this because if you start speaking to yourself in terms of advantages, if you start speaking to yourself in terms of momentum, a clear path, and an entry area while you're trying to figure things out, then you don't take a long trade against everything and ask me if it's a good trade, if it's a good read. Because, guys, I'm obligated to go through and show you what I see. And then Rakesh, did you fix it? Okay, awesome, cool. All right, Cav. Termination, price reverses, trading into the area rather than from the area. The only challenge that I see, Cav. Trading into the area instead of from the area. But because of the termination, because the larger down, because you waited for that pullback just about to the large triggers, you were willing to take a shot, and it made it right to the mid-band. So, Cav, not a high probability trend trade, right? And to people oh, sorry, DL. To people that aren't where they need to be, this is super aggressive. To somebody that understands the idea of a couple divergences at a term, triggers roll, odds favorable, it's a beautiful, beautiful trade, Kev. You just have to know what you're up against, right? In order to take a trade like this, you have to know what could go wrong. Hey, Ron, handed down the chili dog stand. I love it. Have fun, man. Take Friday off. I hope the fish are biting. Enjoy it. I hit my goals before class. I got to go figure out what to do with the rest of my day too. So have an awesome afternoon. Thank you for being here. So DL, let me ask you this. Do you have, ooh, nice. Do you have limitations on your hours, or is anything open? No? Man, I'm going to give you two answers, if you're cool with that. There's never a guarantee of your rules being met in 2 to 3 consecutive hours. So I wake up at 5 a.m. Central every day. Class doesn't start until 8 a.m. Central every day. There are days where I hit my goals before I ever come say hello to you guys. And there are days where I show up in class where my rules were never met. There are days where I can partially hit my goals before I come to class. There's also days where I can form opinions and hit my stop loss before class. So I look at the market between 5 and 8, and I wait for my rules to be met. And if they're met, that's the best. And then I teach class, so I take a 3-hour break, right? And then Central, Rob. So from 11 to 12, typically central. So what is that for you? That's 9 to 10 DL. That is lunchtime in Chicago, right? Lunchtime in Chicago. What market do you trade? That has a factor as well. What market are you trading? Because if you're trading crude oil, pre-market's better than after lunch. If you're trading the NASDAQ, I love the way NASDAQ moves after lunch. I really do. I'm a big fan. I think the movement is great. And once you get past that 12 o'clock hour, and especially into that like 2 and 3 o'clock hour central, NASDAQ tends to move really well. I made $1,000 yesterday afternoon doing nothing. So the cool thing is, DL, is man, sleep in till 9 every morning. Trade the afternoon session of the NASDAQ. Enjoy it. Don't get up at 4 a.m. hoping that something happens, or do whatever. But when I was living on the West Coast in that Pacific time frame, guys, I hated waking up at 4 a.m. Absolutely hated it. Ruined every day that I owned. So I would rather trade the afternoon session. Sorry I missed that one. I hope that's helpful. And I tell people this, when you're trying to decide when you want to trade, do 7 days of market replay, DL, and look at the morning pre-market and look at after lunch. And you'll be able to make a decision. Run 7 days market replay. And you'll know by the end of that seventh day, which you can knock all that out in a day or two, where there's enough movement to reach your goals. And that's really it primarily, isn't it? Is when does it move well enough for you to reach your goals? So if your goals are pretty basic, 250, 300 a contract, you might trade for 30 minutes every day in the NASDAQ if you're waiting for the best of the best. Great question. And be curious to see what you come up with on that. And I don't know if that was a very good answer because it just gave you options. But I think that, yeah, go take a look. Nathan. Damn it, Nathan. Yeah, just see how it moves. So Nathan, you're going to tell me that with a great top, with odds favorable momentum, with no divergence on a pullback to resistance inside of triggers, you're able to just make a whole bunch of money? Trading with direction, trading with momentum, trading from areas. That this is a recipe for success somehow, Nathan? Why am I just now hearing about this? I kid. Beautiful trade, man. 50-50 from a great top, no divergence. I mean, holy crap. It doesn't have to be difficult. Nathan just proved that. Let's see if we can math it. Oh my gosh, you guys and your tiny little charts. In at 86.75, so there is 4.5 points, and then another 8. So we're looking at, what is that, about $600, give or take, $600? Do you need more than that every day? Is that really your boy, Michelle? Like, did you make him? Nice job. Aw. That is so cool. I can't wait to get my kids into it. Well, Nathan, welcome to the room, man. Michelle, do what your boy's doing. He's keeping it simple. You're the smart one because you got him in here. Probably paid for his software. Do what he's doing. It's easy. Nathan's done. He's going to go chase girls now. Or boys, I never assume. Whatever. He's going to go chase what makes him happy. But Nathan, outstanding, easy, effortless, solid. I love it. The mother-son duo. That's rad. Mark, question. I like that you make sure that you address it to me, Jen, because anybody might have answered this for you. Is this a pivot stop out? So many marks. is this a pivot stop out? Well, price traded above the pivot. And this is where we get into the gray area a little bit. The trigger's broke, Jen. And since the trigger's broke, technically, while it is a pivot stop out, it violated the rules for a termination condition, right? Because the triggers broke through. And this is one of those things, because overrun happens. When the triggers get back below it, I'm saying, yeah, that's a termination. And it doesn't give me carte blanche into the termination condition here. But this is, it's just a bad top. It's a bad top that takes you right back to the midband and support and what's been a huge uptrend. But because the trigger's broke, it's not technically a pivot stop out. And the yellow 1-to-1's not printed on the large chart. Can you? All right. So let's see. Hold on. I'm going to show you something. So these 1-to-1s, no, it's okay. You got it. These 1-to-1s are a measurement from a pivot up, a pivot down, a pivot up. And then what it did is it projected where these were going to happen using pivots on the large chart. These 1-to-1s were a pivot up and a pivot down or vice versa. And then it projected based on the pivots on the small chart where that 100% Fibonacci alternate is. So when you go to different charts, when you go to different time frames, the 1-to-1s are always going to be different because they're exclusive to the chart that you're trading. So your 1-to-1s on a 13.2 will be different than a 5.1, will be different on a range chart, will be different on a higher time frame because they're exclusive to that chart. The same way divergences are. This divergence at 95.25 doesn't necessarily have to print here. Well, where do you define areas? You're going to love how I take this right back to 101. Areas are defined on the large chart, aren't they? Perfect. So, and then the other side of that, Jen, is let's do it. If I get divergence from 1-to-1s on a small chart, that's a red flag. If I get divergence twice from 1-to-1s, I'm probably not going long here. This one keeps me on edge. This one says, dude, we're done. That was probably overrun. Does that make sense? And that's kind of a little management thing. So if you were in the long trade, that's a great spot to take some profits and protect yourself. But it's not technically a termination condition. It becomes a management tool for you. Great question. Those are the questions that everybody wonders and they just forget to ask because we start talking about so much other stuff. So I appreciate it. Paul, your triggers are a little wonky. You need to refresh data, it looks like. But you've got the pivot stop out. It's a 50-50, no divergence, entry at the 1-to-1s in between, almost to the synthetics. You take quick profits. I'm not sure what got you out of that one so fast. And then you come down and you go short again. And it looks like quick profits and your break even on the way down. Paul, your 5-1 chart's a little wonky. Those triggers look weird. Your smalls do. Like there may be a problem with data. I would refresh data. But it's a 50-50 with no divergence. What made you jump ship at 3 ticks? That would be the only thing that I'm curious about on this one. Is what made you jump ship at 3 ticks? Other than that, you're trading with direction, you're trading with momentum. That's a great recipe. That's a recipe for happiness. Man, you guys have kept me busy. Let's go look at the live market for a second, see what it's doing. There's crude oil. Man, Rob, this looks like, oh no, because I scrolled back, huh? That's a pretty good termination condition, isn't it? What do you guys think about weak triggers at resistance? Is that reason enough to maybe not go wonky? Sometimes, do you see how smooth the triggers are here? And then this happens every now and then. See how they don't feel right there, right? They don't look like they've got a lot of motion to them. They look kind of scrambly. They should be smooth. And his may not be wrong, but they felt wrong. Mine had a different look. So there's that first one. And then the big split triggers. And then smalls inside and becomes, a tougher trade as you go down a little bit. I like this one with no divergence. But with split triggers, I'm always looking for the higher spot. Paul knew that. That's what he did too. And then from term to term, guys, I don't know what's going to happen. It's either going to go up or down. That I'm pretty sure of. It's either going to go up or down. So did I miss anybody's questions? Did I miss any pictures? Because I appear to be at the end of all the pictures. And once again, man, thank you everybody for posting as much as you've posted and all the great questions. And I think we've gotten some great lessons in here. Troy, talk to me. How are you doing? How are you feeling? Where's my other new people? Erla, how are you doing? How are you feeling? It's a lot to take in at the beginning. I want to make sure you guys are okay. I want to make sure you're not getting left behind. Feeling good about it? Cool. Guys, I'm going to tell you right now, it works. It really does. It works. You just got to learn how to work it. That's the most important thing, is you've got to learn just all the simple stuff so that you can go next level. And give yourself a little grace. This is a lot to take in for the brand new user. But the easiest way, guys, the easiest way to get good at it, again, Muser, so there is still no advantage or disadvantage to the gap theory. The gap theory is just a pattern, is all it is. That's okay. Well, then that makes sense, doesn't it? So the gap theory is nothing more than a pattern. What the gap theory says, Muser, is that if price accelerates away from the large triggers and hits an area, and the large triggers remain a full bar away, price is likely to close the gap back to that triggers. That's all it is. It tells you don't go short, right? Even though it's a good top and even though there's momentum, it says don't go short. It says prices may close the gap back to those triggers. So if anything, I think it's a patience builder. When price accelerates fast and far away, hits an area, fibs, midbands, yellow 1-to-1s, you'll even notice that in the user guide, when you go to the termination conditions section, come on, and you go to the termination conditions section, it says that the large chart midband is a termination if the large triggers are a full bar away. And then Muser, that's referencing the gap theory. That's referencing the idea that when it hits that area, that midband, take care, Cav, if your large triggers are so far away that there's room for a reversal bar to form, don't take any long trades into that, right? This is when the midband behaves as a termination condition. So it doesn't necessarily give you an advantage or a disadvantage, but what it does is it creates an awareness. When I accelerate up and the large triggers don't follow, it's likely to close the gap. When I get down towards that midband and they don't follow, it keeps me from taking that next short trade. Directly into support, the large triggers don't follow. I'm not trying to go short. I'm not trying to fudge my rules into area. I'm just being patient. And then the second half of that, Muser, is when you start to get a little more in tune with your feelings, is if you get that gap theory. Let me see if I can find one that kind of looks like it. If this termination is running up and you're thinking long trades, long trades, long trades, but you're like, oh crap, there's a gap, it creates that patience. And then when the gap is filled, if you find an opportunity, maybe it gets you in a little earlier. So it's going to work a couple different ways. More than anything, it's designed just to let you recognize when you have to be patient and let price close that gap. So like right now, we're into support. And the large triggers are above the reversal bar. So this is 100%. 100%. This is the gap theory. Is it obligated to pull back? It's not. But I know that because if I take this picture 100 times, the potential for it to close that gap to the large triggers is there. And therefore, I'm a little less likely to get aggressive on a short because of this termination. Does that make sense? Does that help? Cool. Kenny, man, I haven't heard anything negative about Apex and payouts ever. Um, Unless you are violating the windfall theory, I really haven't heard anything negative about Apex. And everybody I know who's ever requested a payout has gotten it. So my experience has been 100% positive with them personally, but just sitting around the water cooler, it's been the same thing. I would encourage you to ask the same question over there in Traders Chat too. There's a lot of guys that have been doing it a lot longer than I have with Apex. Um, when you go to get a payout, let's say that you've got 5,000 in the account, one single day can account for 30% of that, which means that you can't have a day that is 1,500 and a penny, or they're not going to pay you out. The windfall keeps traders consistent. It keeps them from getting lucky. If you take a trade during news and you get lucky, they can not pay you out. And guys, they're very, very clear in their language. And they send you a giant PDF when you get the PA account that talks about these rules. It says that they're not looking for gamblers. They're not looking for people that are looking to get lucky, that are looking to achieve all of their profits in a day, but rather they're looking for professionals, people that can do it every day, that can be consistent every day. And it's kind of cool because what we teach is very much in line with that mentality. And I do know, not with complete uncertainty, that it will probably be similar with Nexgen's funding company. Is we will be rewarding consistency, rewarding the ability to make money every day rather than to get lucky on a day or two, rather than over leveraging, rather than blowing through accounts and stuff like that. So I don't know how deep you are into it, Kenny, but one thing that they'll tell you, hey, Muser, there's your gap theory, brother. Pretty cool, right? Is that most people take one payout and never get a second. Little known fact. Because once they're up 2,500 and they can take that payout, they take their $2,000 and they've only got a $500 trailing threshold and they blow out. I've heard a lot of stories of that. Gravitational pull. And all it said was don't go short, right? All it said is maybe that's not my best short. Of course, it's termination conditions everywhere, but some of you guys will trade into a termination condition from a good top. So the gap theory says pump the brakes. You're welcome, Kenny. And your dog, dude, holy smokes, that's a cute dog. If a termination wasn't enough, if split triggers wasn't enough, if no areas inside of triggers wasn't enough, well, maybe the gap theory gives you a little bit. And the cool thing is when it gets there, you can make an assessment. And I think that's it for me. Hope that you have correct stops and placements. One relies on the digital age because your stops and placements are there. They're digitally, they're in. So If for some reason I go long right now, let me make sure I'm on sim, and I close my account. Oops. Let me do this real quick. And I close crude oil. So we'll simulate a crash. Ah, my crude oil's gone. What do I do? Eek. And I go back through and I load it up and I'm going and I'm looking at it and here it comes and oh, I'm so panicky. Um, and you can see that everything is still in place, right? So what's cool, and I'm going to tell you right now, that's not the right trade. It fights momentum. It fights everything. It's a horrible, horrible trade. But Muser, the cool thing is that if you're taking the right trade, right, and your stop's in the right spot and your targets are where they need to be, the pretty awesome thing is that even if you crash, then you're like, well, that's cool. I got time to get back, right? I wonder if we could get paid at the gap theory. That's breaking rules. Actually, that's not true. I have a rule for this. When a termination creates a roll in the triggers and there was an HVA line right here, I love that trade. And it'll probably go up and close the gap, and then they'll make a decision on where they're going to go. That's for you guys when you become chart readers, but that actually fit every one of my rules from 8203 for the long trade. Pretty cool. You're welcome, Paul. Man, no one's ever accused me of common sense before. Um, I love it. Guys, I enjoy what I do. I enjoy having you in the classroom. I appreciate that you will post. I appreciate that you'll ask questions. You newer users, don't be shy. If there's something that you need, reach out. Reach out to me, reach out to tech, reach out to your sales advisor. Old people, not in age, but you guys have been with me for a while. If you need help, send me your plan. Let's talk about it. Send me some pictures. And even more, if there's something that you guys want to discuss in class, if you're like, you know what, I know that he focuses on the S&P and crude oil, but I'm a NASDAQ trader and I'm trying to be a NASDAQ trader. Guys, throw some pictures in the room. Let's talk about your NASDAQ trading. Let's see if there's anything that I can do to help you. The class is open to everybody, and there are no bad questions. There are no silly questions. And that's it. I'm going to shut down YouTube real quick.